Gareth, so we're now recording, which is fantastic. So obviously, welcome to session 6 as part of our Ultimate GAN course coaching. So let me bring up my presentation, which I'm going to be using for this evening. So I'll get that up and running, and we'll have a bit of a chat about what our plan of attack for is tonight. So obviously, I had to dig back over what we talked about the last time we were together. So I've got obviously a good idea. You know, as I said, it was about the 4th of November when we last got together. So the markets have sort of had a good month or so to have a discussion on where they might be heading. So obviously, just to advise you once again, as per normal, I'm sure you haven't forgotten, but I'll play as if you have. Is that Safety in the Market holds what's called an Australian Financial Services License. We're licensed to provide general financial advice in things like securities and derivatives. We've not taken into consideration your personal financial objectives. So in putting together this Ultimate GAN coaching and all of our classes and workshops and online training, we've not taken into consideration the perfect outcome for the individual. What we're looking at is using this information in a general sense and using it as an educational purpose. And you've got to make the final and the ultimate decision as to whether or not that's suitable in your circumstances. And as always, we say to you to seek licensed financial advice if you're after any direct advice as to what you should be doing. So we've got that out of the way, and if once again any questions, always you can ask, and I'll be happy to help you there. So tonight's session, what I was planning on covering was first and foremost just a quick little discussion on how we plan on catching up. So if we run at one session a week, I think it takes us into sort of the middle part of February, thereabouts next year, and we're comfortable to do that if needs be. I'm not going to try and run ask for you to put your hands up and and take a quick head count. So you might remember back to the very start of our time before you commenced the Ultimate GAN coaching program, I sent out a little survey which talked about what your expectations were and those sorts of things. I guess to make it a little bit more formal and make it a little bit easier to track your responses and to make sure that I guess everybody gets a chance to respond. Over the next, before next week's session, and probably towards the end of this week, you'll receive a survey via email. And all you need to do is, there'll be just a couple of questions, and then I'll be able to collate all of that, and then I can make a plan that best fits. So I guess some of the suggestions are is we can keep running one session a week and until we come to the time that we need to, until we complete our sessions, which is certainly one aspect of how we might consider running. I'm also interested to sort of get a little bit of feedback as to how you guys seeing the Christmas period and the New Year period working, because obviously, if people are going away and those sorts of things, I don't want to impede on time with family, etc. So I'm also open to sort of doing a couple of catch-up classes. So, potentially maybe doing 2 nights a week, or maybe picking up something over a weekend, or those sorts of things. Now, I know that everybody has a life and other nights aren't suitable and the weekends might not work, and there's lots of different things there. So I'll just throw the questions out there. And you guys can answer and see what sort of solution would best fit for you. And then I'll sort of collate all of the responses, and then I'll sort of sit down and have a think about what the best way to tackle it is. So as I said, simple road would be just to pick it up one session per week until we get to our conclusion, or we can, maybe just do a week or 2 of a couple of catch-up sessions, not doing it every, I'm not planning on doing 2 sessions a week. For the next sort of, 3 or 4 weeks just to knock it over before Christmas. It's definitely something I think we'll need to take into the next year, but I'm open to picking up some catch-up sessions along the way if that's, suitable, and, we'll talk about some bonus sessions or things like that if needs be. So I guess I'm just throwing that out there for you, and I'll be interested to get your thoughts. But as I said, this is a hard environment or a hard format for me to capture everybody without asking them individually, so I don't want you to feel like your voice hasn't been heard. So we'll do it in a more formalised manner where I'll send out a survey and you'll be able to tackle that accordingly. So just be on the lookout for that over the next few days. Okay. Obviously, we're going to do a market update. Now, that's going to require probably a little bit more time than it usually would, because obviously we've got to update the best part of a market of a month's worth of information. I can pretty much surmise it for you in one easy word: sideways on most of the major indexes and most of the major commodities markets. Obviously, gold was one that kept moving, but there's been, pretty much a sideways channel. Now, I don't know whether that's because obviously the market was just patient enough to wait for us to catch up, and now that we're back in class, so to speak, the markets will take off. I'd actually like that. I've been a little bit bored with this sideways movement. It's certainly on oil. It's been very, very, I guess, painful, and I'll share with you the setup that I was sort of watching for that, which actually hasn't materialised so to speak. So we'll do a market update, and as I said, that'll probably be a slightly longer-winded version tonight. Certainly things like Newcrest Mining, when we last left it, we were sort of talking about a trade off a double bottom. We've had 2 ABC longs since then, and obviously, as we know, gold's really been the only market that's really pushed forward and pushed to fresh highs. So I'd be interested to see how you guys have been seeing that, and would actually sort of be happy to devote a little bit of time to the Q&A as to how you might have tackled that, or what your expectations or what your results were, and whether you traded it, whether you sat on the sidelines and watched, and all those sorts of things, because there's certainly been some good money to be made there. The Aussie dollar, we were also talking about a little bit of a setup that was on that on a retracement that we were watching, and that was probably a slightly profitable trade or break even, depending on how you managed your stops. But once again, if you sort of put into action what we've been talking about, there was definitely a trade set up on the cards there, but it's also started to move a little bit sideways. So we'll do a market update and we'll also look at the major indexes as well, and just have a look at trend like we normally do to make sure that we're over it. So we'll review our markets, obviously those being Newcrest Mining and the Aussie dollar, and then I guess want to start to tackle third dimension work. So squaring time and price was one of David's favourite tools, and obviously something he used to great success. So the third dimension studies actually have quite a few moving components to them there. There's not just, for example, Gann angles on their own. That's just one aspect, squaring highs, squaring lows. We're not going to do all of that tonight. We're going to sort of break it down into bite-sized pieces. So tonight's focus will really be probably built around just sort of geometric angles, a quick little review over what is a geometric angle, how do we use them, and I guess what do we know about them in our markets of choice on Newcrest and the Aussie dollar. So I found a few things that I think are working there, but once again, it's about giving you a process. If there's a tool that's probably as misused as much as, say, time by degrees is, because that tends to be the one that most people jump for, throw it on the market and wonder why it doesn't sort of stick. When I teach geometric angles lessons, I look at people's charts, and they literally are Charlotte's Web. They have so many angles that they seem to convince themselves that every top or bottom there'll be an angle that squares it out. And to be honest, there probably is. If you put enough lines and angles on a chart, you'll eventually run into something. And if you eventually start playing around with calendar days or trading days and muck around with point sizes, I've got every confidence that you'll pick every top or bottom. But we need some systematic rules. We need some simple rules that enable us to know where we're sitting in the market. So I guess what I also want to start to do from, I feel like we've obviously, after our break, we need to come back and just get into a rhythm again. But I guess I want to start to, raise the tempo a little bit, as well as to the amount of analysis we're doing in a session. So rather than just sort of taking a quick view over swing charts and those sorts of things, which should be routine and process for you, what we should start to do now is have one saved chart that we basically would look at on a day-to-day basis. And that saved chart page would have, obviously, it could be a swing or a bar, depending on how you like to look at things. It would have, obviously, major resistance cards on it, the ones that are working. And it would also probably have a couple of major angles on it as well. So we don't want to have too many angles, but if there's angles that are currently working within a market, we want to always know where our markets are positioned in relationship to third dimension studies, because there's plenty of good trades that come along the way where you just might be seeing where an angle, for example, intersects a resistance card. So, for example, a 1x1 touching a 50% point or something along those lines. It can actually give you trade ideas. So it can give you the impetus to actually start thinking that there could be a setup on the cards, even though it may not yet have materialized. For example, on your swing chart, you may not be able to see that coming just yet. So I guess for me, it's about getting into a usable process or a usable routine with third dimension. And over the next few weeks, I guess, if we're going to open the door to third dimension studies, so we'll kick off tonight with things like geometric angles, but then we'll take a look at squaring time and price, squaring highs, squaring lows, squaring a range. We also need to take a look at squares. We also need to take a look at boxes, and we also need to take a look at speed angles. So we've got a fair amount of third dimension studies, which will probably take us maybe 3 or 4 sessions to actually break out all of them, so we can actually feel a bit more comfortable with it. And then I guess we've done a little bit of work on price. We've done a little bit of work on pure time. And then what we want to do is start, as we get towards the end, is we want to start baking the cake and putting the recipe together, where we can actually start putting together that practical forecast that I've talked about as being a bit of our end game into next year. So I guess that's our plan of attack, as I mentioned. So yeah, we'll do a market update. We'll take a look at our markets and see what we could have taken away from that. Once again, making sure we have a discussion, setting up a discussion or some theory to begin with on squaring time and price, and then bring it home with setting it up practically within a market and having a saved chart page. So I guess one of the nice parts about Profit Source is being able to organize your saved chart pages like you would your normal Windows files under like a Windows Explorer menu. So being able to sort of say, okay, Newcrest mining, Gann angles, Newcrest mining boxes, Newcrest mining squares, Newcrest mining resistance cards, swing charts, those sorts of things. Same with the Aussie dollar. We should start to be able to get that filing system, and then I guess we could probably put together what you'd consider a master chart where we have the main angle that could be working in the market at any given time, the major resistance cards, and obviously, major turning points. So if we were to put together a time by degrees reference card, for example, those wall vibration charts, that would also be something that we're putting on there. Now, I guess something I want to note, which was a good discussion. Obviously, the discussion boards have obviously been a bit quiet because of we haven't been having sessions, and but I would sort of like to mention. I'm not sure if he's in the room tonight. But when I was taking a look through there, and I did note with interest that Richard had actually posted I was on the Tuesday night group, I'm sure. I hope I'm not making that up. Yeah, it's the Tuesday night group, so he's obviously in our group. He doesn't seem to be in the room tonight. But Richard had actually talked about around the 4th of December being a top for, or a turning point, I should say, on Newcrest mining. And I was going to give him a big rap because the market actually made a top on the 3rd, and the market's fallen away pretty strongly from there. So not sure if anyone had seen that, and obviously I agree with the work that Richard's posted. He's just putting some time frame analysis work in there. So certainly hats off to him, because that was in advance being able to put it together. So we'll take a look at that when we bring up a chart, and we'll put that together. So make a little bit of a side note to go back and take a look at that thread that was put together by Richard. It's actually, I have it here. What I might do is just while we're having a yap about it, I'll just pause this camera, and what I'll do is I'll just stop sharing that screen, and I'll share. Remember how all this stuff works again. Yeah, there we go. Share the page here, so you should be able to see my my screen here. So what we've got is Richard, who's put together a little bit of a forecast here, saying looking at the more recent advances and retracements, and he's talking about balancing time and calendar day and degrees. He's saying that Friday the 4th of December, Saturday the 5th, and we know markets don't trade on the 5th, and finally the 7th of December could have all been areas to look for. So what I'd say is that that's worked out to be pretty strong as far as an area to watch in the market. So we'll have a look at Newcrest mining and pull that apart. So let me jump into Profit Source really quickly, and what I'll do is I'll bring that up so we can take a look at what our markets have been doing. So I guess taking a look at the share price index, we've been pretty much locked in a range since we last met, from about that 4,500 to 4,800 mark. So if I go back to where we were, I think it was the 4th of November when we last met. So that's getting very close to our seasonal date, which we were watching. Early November was something we've been talking about in the time that we have been together as potentially a top. Now, hopefully I don't need to take you back to the lessons to say, all right, well, if you're looking for a turnaround at that sort of date, you weren't looking for a top is probably the best way to describe it. And since the market did make a low around about that early November date, remembering that most of the major turns that we've seen in the market have all been around the early part of the month. So if I quickly scroll back to remind you, you've got early November, early July, early June, early March, early January, and then we obviously saw early November produce a relatively strong low. The market sort of got away, and I really did think it was a bit up and away from there. That first higher bottom potential there was something that I was thinking, all right, well, it's gapped up, potentially an island, but nice strong movement on the way up. Can't think if it was it was an ABC long. This is on the share price index, thinking, yep, market could be up and away, and obviously we did get filled, big outside day, and I don't think it got anywhere close to 50%, and obviously then fell out of bed. And since then we've really, other than that one day down where we sort of saw a gap down, and then once again maybe an island, where we're looking at the next sort of higher bottom in this what is this sideways period. And if I sort of bracket that sideways period just with some horizontal lines, that's really the area that we've been caught in within the current market. So at the moment, could be coming back to test that sort of channel. And maybe we, I had been looking as potential, I think that low is quite strong, that one there on the 27th. And, I've been watching for this market to push away, but it really hasn't given us that first higher bottom opportunity to get long yet. And so we're still sort of caught in this sideways period. So it has definitely been a challenge. So there's not been a huge amount going on since we last got together in terms of major trends, particularly on the index markets. So just to follow the normal process or the routine, obviously the swing chart's going to give me an interesting story. At this stage, we have an uncertain trend. I guess of note here, 239 points on the way up is certainly the biggest upswing we had since that early November upswing. So that's, once again got my attention as being relatively strong. And 115 certainly a lot less than 194. So you can see our swing chart here is giving us a number of, sort of old tops here. Back in sort of early November, and then you've got a couple of old bottoms there, false breakthrough, and maybe that will just be that first higher bottom on the way back out. So we are waiting. If we do get a confirmed higher bottom in the next day or two, or in the next few sessions, you could say, we're in a situation where we're seeing confirmation of that first higher bottom, and what that means is that the trend will then be technically up, and obviously potentially a place to get long. With the full knowledge that we're yet to break out of this sideways range. Our market's interesting on a weekly chart. So if you take a look at the weekly chart, you'll see that we do have a higher bottom, we do have a lower top. All we need is it to break out through that weekly top in November, and we will have an uptrend as being confirmed. But all of our trends have actually gone from being very clear to actually uncertain, and they've done so in a pretty quick fashion. So we had a fair amount of clarity on the bigger picture, where we had sort of the 3-day and the weekly swing charts all pointing to higher prices, and then they've all moved into uncertain territory as well. Keeping that focus on our swing ranges, 319 is a little bit less than 326, 253 is certainly a lot less than that 400-point swing down. So from that perspective, you do have some contraction on the downside. If we can get a nice expanding range to the upside, we're in a situation where, trends are back to being confirmed as up. So our market's definitely been a little bit different to what the major markets have been telling us. And what I mean by that is if we go and take a look at, say, the S&P 500, it's had a slightly different picture whereby, it's just got all of these sort of old tops here, which you just can't seem to break out through. So I just jump back into my bar chart. You'll see here that, the market is really just holding this top around 11, call it 1100 and a few points on the S&P 500. So really what you've got here is you do actually have a setup for a trade. If I was talking about the, breaking of multiple bar chart tops or bottoms from your number one trading plan, you really do have the potential for a setup here. But really what you need is I'd be wanting to see at least a couple of days close. If I put a horizontal line on there, you could argue that there are all multiple tops through there, but as you can see, we haven't had one close. It's had 2-3 cracks to get above, but it can't actually close or hold above there. So I guess what I'd be cautioning here is, whilst I think the breakout is more likely to the upside, as you can see, you've got a couple of outside days followed by an inside day. That's a pretty good suggestion that there's a fair amount of volatility going on, and people, I'd say people are a little unsure as to what's going on. Well, no, I've been, certainly scratching my head on a few things. I think the market's in a good position to actually push to higher prices, but it's just whether or not we've got that opportunity. So I guess if you were calling that multiple bar chart top, my guidance to you would be is that I'd be looking for at least a 2-day close filter above those tops. I think buying it purely as a breakout, I think has a bit of risk, as we've seen. Buying it as a breakout through there, you've seen the market likely stop you out, and the last couple of times it's had a crack, you had the same result. So I'd be saying maybe a couple of days above. And look, what would be ideally the safest trade? We've always talked about if we could draw the lines on the market like this, we could give up education. If we could get a couple of nice strong closes above there, obviously volume is a backup. You'd really love to see high volume pushing through. I would expect if that was to occur, it might be a 2-day, it could even be a 3-day move, as obviously as David talks about. There's trend line. Markets can often make 3 days really strong move. What would be really encouraging is to maybe wait for a couple of days of closes. But even then, if it came back and then sort of retested that top, gave you maybe like a 50% pullback, came back and sat on those old tops on some weak volume, that'd give you a higher bottom, and then you could be looking to to push to higher prices. So if I pop out of where we are in Profit Source now, just come back to you guys. I guess if you were a betting person in the index market, I think the Australian market's just lost its way a little bit. It's now looking for leads from the US, where it's been happy to sort of drive further on its own bat. I think a lot of people who bought have already bought, and I think new money's waiting to come in, but it's cautious at this stage. What I'd be saying is that the December seasonal date is one that if we did get a breakout to the upside, I think that could be definitely an area to be watching, just purely because it's an area that we know to watch for each year. Over the next couple of weeks, obviously, because we are in early December, I've gone back and I've done some studies, and this is separate to our two markets, but it's worthwhile me having a discussion with you, is that if you go back and look at your master time cycle work, which was actually something that we left off on the last session that we did, yeah, I'll come to that in 2 seconds, Debbie, because I know exactly what you're talking about there. One of the things I was watching is that over the last few years, the phenomenon known as the Christmas rally is obviously one that many people know as a condition in the market. Now, obviously, because we've had bear markets over the last couple of years, we haven't had Christmas rallies. But if you go back and take a look at what happened in 99, back in 89 and those sorts of things using master time cycles, you'll probably find that there is a volatile but actually quite clear trend as far as a potential for a Christmas rally. So that sort of post seasonal date into the early part, say January 4th, January 5th, would be an area that I'd be watching for a potential little run this year. Now, the market could get cactus and sideways until that December seasonal date. It might end up being a low and pushing out from there. But all I'll point out to you is that the possibility of a Christmas rally in the terms of how that's used in the market, I think is absolutely a chance. There's a bold statement. It's absolutely a chance. It's a definite maybe. But I think the likelihood of that happening is one that I'd definitely be watching. So I've sort of encouraged people to have a look at that and to know how they might be on top of that. So let me just jump back into Profit Source. And I want to answer your question for you, Debbie, and I've obviously just sort of sum up where we are on the S&P 500 as well. I didn't do it on the share price index, so I might actually just jump back and finish off our discussion, because obviously we've looked at swing charts, etc., but we should know, essentially where we sit in terms of retracements. So if we're looking at the major bearish range, which is the 09 top, sorry, 07 top into the 09 low, 68.80 was the high, 31.11 was the low. We're yet to see anywhere close to that 50% point. So, the closest we got here was the top here at 4,900. So about 100 points off. Now, if we happen to get a market hit that price around about a seasonal date, for example, or if it made a low or made a high or something around a seasonal date on or around 50%. Again, David actually says markets that give you 50% pullbacks or sit on 50% extensions or 50%, big picture, all-time low to all-time high type stuff, and do so on seasonal dates, they're generally a gift. And so that'll be something that I'd keep in the back of your mind as well. Now, to answer Debbie's question, she's sort of talking about the S&P 500, much like the Dow that we know, is that it's been locked in this sideways pattern. It's had a few good goes to see whether or not it can push higher. Volume's been less than average. Okay, so I guess one of the reasons why you could argue maybe we haven't seen a strong push through here is that we just really haven't seen a huge rolling in with the volume behind it. So, on these couple of days where it's tried to break out through there, that one there, and those 2 days, whilst it's higher than the previous couple, you'd have to argue that it's nowhere near the sort of volumes that we've seen, where we've obviously that could be contract rollover, so can't draw too much into that. Yeah, June, September, that'd be contract rollover, but we're still sort of trading lower than normal volumes, and that's been a bit of a concern, is that the markets haven't been able to push higher because there just hasn't been the volume or people buying. Now, conversely, on the days that markets have been going down, it's been going down on quite weak volume as well. So what I'm suggesting is I don't think people are too committed really one way or the other. You know, I wouldn't say the Bears are in control, and I wouldn't say the Bulls are in control. It's very much just a neutral market. So we know that we're in an uncertain trend. We've had lower tops, lower bottoms. We've now busted back out through those tops. Weekly chart, I guess, is still what is a very clear guide to us, which we're not getting on our share price index market, is that we are seeing clear higher tops and clear higher bottoms on the weekly chart. We have seen obviously a weaker pullback, so 45 compared to sort of 72 points. Now we've only seen 52, so we've got a pretty, you know, I'd argue that that's really good precision or repetition. 84 and a bit, 87, you know, 80, 86. They're all pretty close as far as numbers. Now we're 52 points. If those sort of market swings are going to continue, we've probably got about another 30 to 35 odd points, which would be interesting to see where that puts us. So one of the things that Debbie was pointing out, and part of the reason why the market is probably in a bit of a holding pattern, is that we are sitting, you know, once again, very close to that 50% of our bear range. So 1586.50 is the high. And the low is 665.70. So we're pretty much hovering around that, and you'd have to argue, you'd have to be in a bearish, a neutral to bearish camp. While ever we're hovering underneath that major 50%, I don't think it's time yet to pour back into the long-term investing side of the markets and you know, buy up all the shares that you can. Gann has some rules, and if I had Tim with me, he could give me the page numbers. But he talks often about 50% points of the major move down being, you know, logical selling points when the market just runs out of steam running into them. Now, combined, the perspective that we often look at is balancing time would also be one that we could take a look at. It's about 511 days down. That's approximated because it's a weekly chart. That actually gives us about the 16th of the 11th. Okay, so if we take a look at where the markets have made their stalling point, just tune that up and we'll get that exactly right. Top was on the 11th of the 10th, one day out there. And if we take a look at the low here, it was on the 6th of March. So we know that that run down in terms of time was 512 days. And if you take a look at sort of 256 days, which is 50%, it was going to give you about the 17th of the 11th. Now, whilst the market has actually gone higher than the 17th, that's the sort of 16th, 17th there, the market really has struggled. So we're not, you know, really would have been nice if you could go get an exact 50% alignment in time and price. But at this stage, I do think, you know, that's a good enough call to say that, you know, 50% in time, 50% in price. As you can see, if you stopped being long, as I move our retracement tool, had I given you, you know, if we could all be smart enough in hindsight to say, well, stop being long after the 17th of the 11th, don't try and be long, you know, you'd be pretty happy with your results, because that was really the last of our decent runs out of November. Market topped on the 16th. So I think there could be something to be said that the 50% time and price alignment is having something to do with the market. Sorry, I saw your question, Debbie. I'm just finishing my statement. So I'm not surprised the market, I guess, if I come out of Profit Source, I'll tell you, I'm not surprised that the market is hold 50% retracements in terms of time and price. They're pretty strong areas to watch, and I think you guys would have a skill set now that would give you comfort in knowing that would be a place to watch. Now, Debbie said you've got friends that are trading the mini Dow, yep, and they're out of the market at the moment, but they're waiting for either a lower top or a higher bottom. And the Dow, yeah, we'll take a look at the Dow. So look, David says our greatest, you know, and I harp on this, and I only heard him say it again in September of this year when we were up in, you know, the Master Forecasting Summit in on the Gold Coast. You know, David says one of the greatest things you've got going for you is you don't have to be in the market all the time. And you know, if you've been trying to trade this market over the last couple of weeks, it's been pretty painful. You know, there's been some good runs, but you know, I know in some of the equity trades that I'm involved in and sort of trying to get set in, you know, it's just been hard work. And I guess you know, hindsight says if we'd been out of the market altogether, we, you know, been better use of our money getting whatever percent we get in the bank. So you're absolutely right. I think waiting for confirmation right now in our index markets has a lot of sense. Now, we could obviously have a different view on, say, something like Newcrest Mining because it's more gold driven. The Aussie dollar, obviously, there's less, you know, less factors that are built around index markets that tend to affect the currency markets. But Debbie, I have absolutely, if you all said to me, I'm sitting on the sidelines waiting for confirmation because I just think being in the market right now is a bit of a mugs game. I'd completely agree with you and have no problems with whatsoever. I'm sort of trying to cheekily find a few things that I think could be getting in early, but that's proving to be a bit more challenging at the moment. So waiting for confirmation could be a good crack at it. And I think that's probably what we can say this market's trying to do. It's actually trying to find confirmation. It's trying to find someone who's going to take it higher, who's going to drag it lower, and then everyone's going to pour into that camp. So, yeah, no worries, Des. Everything's good, mate. So I gave a bit of a long-winded intro as far as the kids' situation is concerned, but everybody's home and we're all well. So that's fine, Des. So I'll catch you up on that a bit later if you'd like. All right, so let's go back and jump in, and we've taken a look at the Dow, we've taken a look at the share price index. They're kind of hovering about the same level. If you want to argue the toss of the coin, you could say that the share price index is slightly underperforming the S&P 500 if you consider the same position in terms of time and price. So let's get back into profit source, and we'll take a look at the Dow Jones. We won't look at the help module. There we go. Take a look at the Dow Jones futures contract. All right, so let me get that set up. So once again, sort of looking right on that 50%. I won't bother tuning that up to the nth degree. As you can see, we're sort of hovering right on that, point in terms of time, or sorry, in terms of price, making sure we know where it sits in terms of a balancing time. We're starting to sort of look at, if we're expecting that time frame to balance out, right around that sort of, once again, 16th of November. So if we're sort of expecting that, about the 11th, wasn't it? We could already be looking into, July of next year, July, early August. If the market sort of had a little bit of a pause around the 17th of the 11th, you'd argue that 50% is working well. The 100% point might also give you something to watch for. You could argue that the 25% points were ones that were pretty useful because that had given us the 12th of July. Now the low came in on the 8th. The market really moved away on the 13th. So, the argument here is, 512, 128 is a quarter, 256 is half. Market sort of 23rd of the 11th has been really where the market sort of made its last little dash up. It has gone higher, but as we talked about on the S&P 500, trading through that sort of the whole last week's been sideways rubbish. And if you look at the 75% point in time, we're now looking at about the 25th of March next year. So I'll just get out of my chair for 2 seconds, grab my phone. Only reason I'm grabbing my phone is it's got a calendar in it, and I just want to look and see where the 25th of March sits next year. Because obviously 25th of March straight away gets me a little bit excited about our seasonal date in March. Now the 25th is a Thursday, so the seasonal date's on the Sunday. Okay, so it's Sunday, Monday would be the actual seasonal date. So the 25th sort of is pretty close to that. It is a trading day. And if you've got something, I'd put that in the calendar now, around about late July, early August, as just being a date to watch. And, maybe we'll see the market drive into a top or a bottom. We'll let the market tell us that story. And then obviously you've got, if that comes together, you've got 25th of March, then you've got around, July, August as an area to watch. So, just doing some simple work is actually giving you some benchmarks to be watching in the in the major index markets. And the S&P 500 and the Dow are obviously moving in very similar ways. So we know, looking at our information on a swing chart, we've got the same sort of picture that we have on the S&P 500, expanding upside swings, 163 points down. Potential for a higher bottom, and maybe we're going to get out of this little sort of sideways conglomeration at the moment. Trend is certainly uncertain. If we did get a higher confirmation or a higher swing bottom, interesting to note that the session on Friday for both the S&P 500 and the Dow were both inside days. So maybe the market is in that little bit of a process of its refueling before it wants to go higher. Little gap through there. The market's attempted to close it. It has. It's sitting above that though. I think, as I said, the breakout for me is more logical to the upside, but that doesn't mean that, the expectation wouldn't be that, there's some downside in it as well. So, don't sell yourself into the fact that it has to be, to the upside. I've made that mistake, I can tell you. And, you just want to go with what the market tells you. So same sort of filters would apply with, we're now at about 125%. But we are holding above that 100% point, all right? So it sort of hasn't tapped 125. We're holding around that 10,347 mark. That seems to be an area it likes to hover around. Problem we have, though, is that we can't just take that purely as a standard breakout trade. I think your risk is relatively high. If we call that sort of an average of the multiple bar chart tops, you're really going to want to see a couple of days closing above. I'd say that 2-day close filter would give the market a fair amount of confidence to push higher. So, clear our chat to date. So I'm just going to come back and views because we've looked at the SPY, we've looked at the S&P 500 and the Dow. Is everyone happy with the is that in agreement with the sort of work that you guys are doing, and are you comfortable that that's a fair assessment of where we sit in the market, particularly with the how would I handle it if it breaks out one way or the other? Breakouts to the upside, I think you're definitely going to want to see at least a 2-day close above those tops. Before I got really excited. Volume being on strong volume would also be a good sign. Running into our seasonal date, of which we're, about a week, 2 or 3 weeks away from. Lost all track of. Today's the 8th of December, by the way. That's more for my benefit, not yours. So if I do the tough mathematical calculations, we're talking about, 13 odd days before we get, so about 2 weeks to that seasonal date. So we might see the market go sideways until then. One of the studies I do is I go back and look at how long the sideways runs and sideways periods would be. Now, we know that the Aussie dollar and Newcrest are moving, so that's not something we're going to do in depth. But as a little sideline exercise, I'd go back and take a look at the last, 10 sideways periods on the S&P 500 or the share price index and work out what the average time length is. I can tell you I've done that for oil. And I can tell you that the average length and the high end is about 50 days. And I can tell you we're about there now. So that's part of the reason why I'm expecting a little bit of a breakout. But when it comes to the equity markets and the index markets, that's kind of how I'm seeing them. Certainly comfortable to be out of them. Confirmation of a higher bottom tonight would be a good sign. Breaking out of those tops would be even better. 2-day close. And then maybe getting a higher swing bottom. And if it can do that in the next, say, 3 or 4 days, comes back, retests, sits on those tops, we might get a strong run into the seasonal date. So yeah, so Wayne said you've been looking for a short setup on the S&P since the 17th, been stopped out now twice and still watching. Yeah, it's yeah, I don't really have I can't blame you for trying those setups because I think they had a lot of merit. I think what we've got though is some patience and really this is the sort of time where David would probably try and get into an intraday setup. He'd probably try and get close to the market and get set with really a small amount of risk and let the market kick him out. And if it kicked him out 3 or 4 times, he didn't bother about that because when it did go, he'd be on it and he'd make it all back. But I'm quite happy for you, Wayne, if you say, yeah, look, twice bitten, twice shy now. It's a little bit, but hang in there, keep stalking it. Don't let the opportunity slip away. But, I keep tipping my hat. I do think the breakout will come to the upside. That's what my intuition for the best part of it is telling me. I don't think this market's ready to fall over completely yet. I still think there needs to be a rush of some dumb money. And I think everyone's being a bit too coy about where this top is right now. And I don't think the market's generally that smart to know that here's the top. So if it is, I'm happy to be proven wrong. But I do think that, if this market can get its act together, we might get a strong run into the seasonal date, and then we talk very briefly about that Christmas rally. Now, the Christmas rally generally runs from the seasonal date into the early part of, January. Now, that's not to say that we may not see a run down into the December seasonal date. That could end up being a low. So everything I say could, go out the basket, and the seasonal date might be a low. But at this stage, if I, had to nail me to a wall, I think the breakout should come to the upside. But if it doesn't come soon, the more risk there is to that downside. So I'm happy to sort of field any questions equity market based. I'm happy to do a longer discussion on it tonight, only because it's been a little while since we've had a chat. And, there's been a lot going on. As much as there's been sideways movements, there's still plenty to talk about and to see what you've been doing. And thanks for Wayne for sharing what he's done. He's had a crack trying to, get short, and that hasn't sort of panned out as well as he would have liked at this stage. Obviously, Debbie's saying some of her colleagues and friends are saying, let's sit out, wait for confirmation, which I think's got a lot of merit. But just in general, if, for those guys who are trading indexes, I'm happy to have a chat about those. Questions aren't brimming at this stage. Obviously, if you want to ask me a little bit later. I just had someone let me know that they've been watching it go sideways, and their better half has had them doing some painting. So that's always a good use of your time if you're not trading. See what sort of odd jobs around the house can be done, because that'll mean that you don't get too fidgety and have to go and touch the trades. It's actually been in many ways a little bit of a blessing to be distracted by other things, and I don't feel too bad. I don't feel like I've missed out on anything. The market's really going as sideways as they have. So, all right. Well, I want to look at two other markets before we get into our markets of choice. I want to go and take a look at the oil market, and I want to take a look at gold, because obviously they're two strong things. We'll have a quick squiz at the US dollar as well, because that's got a big part to play. Then I want to do Newcrest Mining and the Aussie dollar, so have a detailed discussion on those and get your input and get your feedback. Kind of feel like it's our first session together, and I worry that you're a bit quiet. So, if that's just me, that's great. If you've got questions, if you've been sitting on things for the last month going, I'm not sure, or I wish, or could I, if only Aaron was here and maybe you could, help me out or whatever, now's a really good time, because I want to make sure that you guys are comfortable with the little break that we've had. I want to make sure it's been productive, and if there's been questions, we get those answered. So I'll jump back into PS, and I'll take a look at the gold market first, and then we'll take a look at oil. We might do gold, US dollar, and then oil. How's that sound? All right, so back into profit source. So if we take a look at the gold market, which has obviously been driving, the move on Newcrest, since we last got together, November 3rd, that's when we'd seen gold break out to, 1,060, 1,080, and really what we'd been watching was, that double bottom on Newcrest. Oh, that's okay, no problem, Debbie. Working on the assignment's good as well. If you take a look at where gold was sitting, around about when we were last having a chat, we're sitting right on that 50%. And, I guess from a balancing time perspective, the market had sort of done, about 19 days up, about, 17, probably a little bit less actually, probably 16 days, 15, 16 days down. So sitting on a 50%, obviously market was poised to, as we now know in hindsight, to actually rocket. And we know that it, without really giving us many signals to trade, you got an outside day there followed by, another down day, and then finally got going. So you would have got a swing in your chart there. Not the easiest setups to have taken in gold. Market obviously then pushed to, that $1,200 an ounce, which everybody got, ecstatic about. Then we had this day here where we had, a change of, 1,200 was, 11.95 is the high and 11.30 is the low. So you've got a, 50, even more, $65 move, in one day on an outside day. And then obviously, if anyone can explain if you're long how to hold through that sort of thing, unless you had stops underneath that swing bottom, which I'd say is probably a tough ask. Obviously a bit hard to then participate in this sort of move to sort of the high, which is at 12.30, 12.27. So Lois is telling me gold's hit the top of the square and 50% of the square of the all-time low. Yep, very comfortable that, in time, okay. Very comfortable for gold to take a little bit of break here. I was sort of only seeing some people recently, and I said I thought it was a little bit overdone. Obviously, we've had a pretty solid pullback in the last two sessions. So, here you had a $46, $47 move in a session, and then, another followed up by, another move of, that gives you change of close to close. But if you look at the range of the day, you've got 11.66 and 11.30. So you've got a $30 range on that day. So I guess looking at where it sits in terms of a retracement in this first little bit, well, it's come back to sit once again very close to that 50%. I'd actually be quite happy for it to come back down and sort of sit right on that 50 before it finds some balance and maybe gets going again. I think you could start to see a little bit of sideways anyway. You know, it's just, you know, sideways to down anyway. The US dollar looks like it wants to have a little bit of a run. No guesses for what the swing chart's telling you. Okay, so if you don't need to know the trend, it's been pretty simple. The trend has been clearly up, as you can see, and seeing expanding ranges. So, you know, we've then seen this big sell-off to the downside. So you really are looking, if it can push through that 50%, you might actually be looking at a lower top as a shorting opportunity, and you know, that could be something that would translate through to our Newcrest mining share. But at this stage, the one-day swing chart's still up. The 1 week swing chart is screamingly up. So you'd want to have some strong time and price reasons for that top, and Lois has just mentioned a couple of there for us. Very hard at the moment to be using a resistance card, because obviously we're at record highs here. We're at you know, it's hard to sort of see how far the market's retraced in terms of time and price. So I'd be kind of keen to know what this range had done here. So I might just make that a weekly chart. I'm sort of thinking about ranges repeating and extreme ranges. So, you know, in terms of price, you've got a massive movement here from the lows in sort of 1976 to the highs in 1980. And I might just drag that using the big picture. I'd just drag that forward and just see where we're sitting in terms of the current move. So we know that range actually had some repetition to it, because if I plonk it on that low there, we did get that 100% point, and we're now at 125% of that major range. And I guess if I plonk it on that low there as well, yeah, we're about 66, 2/3. So, you know, definitely historically, we're starting to see a bit of an overstretched market. So all the indicators tend to point that it's a little bit overbought. But, you know, if it came and gave us a pullback, you know, maybe a cheeky lower top trade for, you know, a short period in time, followed by, you know, some more upside, because there are plenty of pundits calling for gold going higher. Ashley's saying gold's approaching 360 months from the 1980 high, and also 360 months and 360 degrees or days from turn. So yeah, absolutely, they would be important areas for us to keep an eye on. So I obviously keep you. I'll go and take a look at that, Ashley, and I'll post some stuff on the forum if I can get any, make any, you know, real sort of discoveries there. But at this stage, you know, market's very strong. We've had big volatility, and I think that's going to come into play. We've got to remember part of the reason why, that's okay, Ashley, 360 weeks, I'm with you. You know, obviously 360 days, 360 minutes, 360 weeks, 360 months, 360 years, they're all important areas for us to watch. Now, I guess why we've seen such a strong sell-off on gold is that we've seen, I guess, the US dollar over the last couple of sessions really sort of power back up. So, you know, you've got this little sort of low here on the 1st of December, and then the market's, you know, moved, you know, a fair few percentage points, you know, in 1.3% in that session. And, you know, if you sort of take a look at sort of a 3 or 4% move in a few days. But I'm not really sold on anything other than the fact I've actually got a date of early February next year as one to be watching for the US dollar for the major turn. Every time we've seen a rally of any sort of description, it's been followed by selling opportunities. So if you follow this run down, whilst we've got some increased volatility here, we also had something similar. So one of the things I always do when I'm measuring sort of what I think might be a counter trend move is that I'd go back and look at the last major turn, or the last major sort of run up, and I'd say that's probably, in terms of a counter trend move, that's the last major up move. And then I'd go and sort of plonk it on where we are right now. So in context of that move from mid-October to early November, we've only done about 75% of that. I'd have no problems whatsoever for this market to get up to that 100% point. And if we sort of look at the time that it's taken to do that, now you've got 13 days up there. If I sort of plonk that on where we are now, well, that's sort of giving us pretty much where we are in the market now. So, you know, if that was to sort of hit that 100% point in the next day or two, assuming that it gets stronger, then I'd be quite happy to think that that is just, once again, another selling opportunity, because all the way down through the US dollar, you know, every single recovery has just ended up being an opportunity to just get in there and sell some more. So, you know, people have been selling into the rallies. I'm 1 day off there, I think. So I'll just move that forward. I just want to see that the context of that previous move. Why am I not getting that? All right, so yep, absolutely, Wayne. We're going to deal with point sizes tonight for geometric angles, and then we'll start to pick up on squares when we do the squares lesson as far as that's concerned. So definitely on my radar, because it's always a question that people get, always want to ask me. So if we're looking at previous sort of counter trend moves, I'd probably call that number one, where that orange arrow is. We're now sort of saying number two, well, that's run out at 100%. So I'm now sort of plonk it on that low there. Well, if it ran out there, well, we've sort of got, even a tighter point. So you could probably pop some speed angles on all of these little moves, particularly the original reference range. So being a little bit pedantic, we haven't even talked about speed angles yet, but I'm just going to be a little bit pedantic and get this exactly where I want it to be. And I'll just copy and paste that. Get rid of that one. It's a made up one. So if and I've managed to bugger that. Well done. Go back and copy that original one again. Well, that'll give us a pretty good indication that in the next day or two, we could get up there. Now, I don't know about you guys, but if you saw a little top forming somewhere about there, that gives you a nice little double top. And, market's really struggled. It hasn't sort of closed much above that 76.5 point. So, yeah, look, another session or so, US dollar strengthening, gold weakening, and then we might find that the market is in a position to start heading lower again. So that initial reference angle or reference speed angle is about, that's probably 1, 2, 3, 4, 5, 6, 7, 9, 11, 12, 13, 14 days. So 14 days would give us into tomorrow. So into tomorrow's US session or tonight's US session. So that's all kind of lining up maybe for another opportunity, another rate, I guess, as in the gold market, so that we will keep that in mind as we look at Newcrest. One thing that I guess I'll point out to you, obviously many of you guys, if not all of you, are in the Platinum program. And I guess I've been watching oil in 2009 doing just with boring regularity, these 50% retracements. So 50% retracements in price and time, but let's just keep it to price at this stage. There's one opportunity, there's 50%. Market, that's the best run you'll see all year on oil. I can give you that as a hindsight bit of analysis for you. Next little run there, well, you've also got another 50% retracement there. That was also a 50% retracement with a bit of fudge factor. That one there, from memory, was also 50%. Then if we keep moving it out, picking on that low, picking on that top, there's another 50%. Now, obviously, they're a nicer one as far as hitting 50%. That was a nicer one there, hitting 50%. Just point out to you that you look at the actual August contract, which is what you would have been trading through this period. If we use that as top number one and that is top number two, use that as a 200% rule. If you do it on the actual August contract, 200% to the point gives you that on a 50%. And July 13th is the anniversary of the all-time high. So trading short, stopping and reversing there and going back out the other way was definitely a possibility. I know some people who did it. And what I'll point out to you is that when we last got together, oil was, meandering around this level here. And it was sort of looking like it wanted to hold. And, it was, not really going lower. It's continued to sort of give us a bit of death by paper cuts. And really, if you've tried to trade through there, you've really, probably pulled your hair out, on a regular basis. There hasn't really been any standard signals to trade, but if you look at the swing chart, it's sort of been, really choppy, equal tops, lower bottoms. There hasn't really been a way to get in there. There's been some good intraday trading, but, that gets a bit of hard work because you've got to sit up all night long. So if I share with you, I guess, my view that I was watching that as another 50% opportunity. So the market pushed out strongly from there. You read that Platinum article that I just that went out, in late November, I think it was, talking about why I like that date on master time cycles. I still think that's going to hold as a low. And as you can imagine, I've been, I saw that as a first higher bottom opportunity, had another down day, looking for another first higher bottom opportunity. Very rude outside day that, had you taken that as an ABC, would have got you in and out on the same day. And then we had another down day. So maybe it's going to come back and double bottom with that date, but it's right on that 50%. So for me, that's an area that I'll be watching, key area to hold on oil. So I'll just set that up exactly. So it's $82 even, and the low here is 65.05. So that's sort of 73.52 mark would be an area to watch. Now that's kind of interesting because that 73.52 mark is also, I'll just open up a new chart. I'll open up a new chart and I'll just do a highs resistance card on oil. I know the all-time high is 147.27. Send that right. So 73.64 is half the all-time high. So as you can see, market held, market held, market held. I'll just go back to that previous chart. They've got 73.52. So call that 73.53 on the small range, and then using that with 73.63. So there's 10 cents difference, okay? But that's a really strong cluster for me. So I'm thinking what was old tops now looking like it could become old bottoms. Now, I'll pop out of here and I'll come back to have a chat to you on the camera. So I guess to crystallize that, because I know a lot of you guys do follow oil and some of the stocks, 73.53 is the low tonight so far on oil. Fantastic. Thanks, David. That's going to be a real tipping point. If the market can hold that, it's not to say it's going to leap and it'll take off, but I'd have to stay in the bull camp while ever it sort of holds that. If it sticks its nose back under, as David said, it's starting to test that low at the moment, breaks those old tops, breaks those 50%, half the all-time high. I think the roadmap might tell us that we've got some lower prices to come, but we're right on an interesting tipping point, and oil's just been absolutely painful to trade over the last month. So it's definitely been... And Key's telling me that the 8th of December is 161 days from the 30th of the 6th high. So I was aware of that, but I'll point that out for everybody. So pop the camera off and I'll just jump back in. So the 8th of December, 7th or 8th of December. So Key's talking about that 161 day count that I've become a little bit partial to over the years, and sort of holding around about that double top high there. So maybe we're seeing double tops here followed by a double bottom. If I point out to you that off our low there in July, so you guys are getting a bit of a forecast on oil. I'm feeling so concerned that I've neglected you for too many weeks that I'm now sort of passing out all the forecasts I can. But if anybody is watching, that as a date, major low here in July. I'll just throw some angles on here to keep us interested. We're sort of squaring out around about the, the 21st of December, so there could be some things to watch. To me, that 1x1 angle, and we're going to do angles tonight, but that 1x1 angle off the July low, as you can see here, support was held. As you can see, it's calling tops and bottoms pretty well, so we're getting into our angles less than early, but hey, there's no time like the present. So I'd happily call that a bit of a strike. Hold that top there. Happily pulled that bottom apart. Missed that top there, but obviously the market was pretty cactus after that. And you can see that the last couple of times it's got anywhere close. So as you can see, the 50% holding around this 1x1 Gann angle, it's going to be a bun fight in this market. And really, I think if it gets under the 50% and it gets under that 1 by 1, I think you're going to see that that could be a low. Keeping in mind that 21st to 12th is exactly 1 year from, you know, that low there, which is the bear market low 19th to the 12th. So the December seasonal date's been very kind to this market. So if it gets under the 1 by 1 and under the 50%, you might call the 21st to the 12th a low. And if it can get above and hold above the 1 by 1 and make higher tops and high bottoms, you might consider that it's going to run into potentially a high. So that's a little bit of extra. So there you go. There's some oil stuff for you as well, just to keep you all on your toes. All right. So happy to share that with you guys as well, just as a little bit of a bonus. So as I can say, this market through here has been absolute rats and mice. And I mentioned to you earlier that one of the things I go and do is go and measure how many days sideways the market ran. So it's run about 37 days from top to bottom, and at the moment we're up to about 46, 47 days, which would, you know, be very close. You know, we'd call that half of 90. And as I said to you, the oil market hasn't over the years, and once again, not trying to make this an oil lesson, about 50 days is the maximum that it goes sideways for. So we're getting very close to that period now. So if it doesn't hurry up and do something now, you know, I'll be left scratching my head a little bit and back to the research drawing board. All right. So let's, we've sort of, you know, very quickly taking a look at the swing chart, you'll see why it's been such a hard market to get a grasp on. So the trend at the moment is still lower tops, lower bottoms. So you are trying to go long against a what is a downtrend. Strong reasons why I like that as a low, and through here it's been tough going. And if you take a look at the you do take a look at the weekly chart, and I guess this is something that has been helpful for me trying to, you know, get an idea, am I looking for a top or a bottom, is all we need on the weekly chart to get the idea that, you know, we've got a confirmed uptrend, we've got a higher top. If we can get a higher bottom on the weekly, we're in a situation where we've now got a confirmed uptrend, which has pretty much been what this market's trying to do most of the year. So we've had a little bit of sideways through here. This weekly trend has stayed uncertain now for a long, long time. This is an interesting point. It's sort of now starting to do expanding ranges, 795, 811, 961, but we have a very clear expansion to the upside. So I think there's enough guidance in there for you guys. If it holds at 50% and that 1 by 1, then I think we can maybe call the seasonal date around 21st could be a top, and if not, we could be looking for a bottom. All right, so let me come back to you guys. Have a quick drink. So that's sort of the who's who in the zoo of the major markets that we look at. What we'll do is we'll take a look at Newcrest Mining now and get into a detailed discussion there, and the Aussie dollar, and just get your views and see how you've been tackling it. And from that perspective, we'll then lead into having a quick chat about third dimension studies, just getting started with Gann Angles. I'd be interested to hear what you guys think about Gann Angles, whether you've got a really great system for filing or, you know, for creation of those charts, and then sort of making sure you go back and check them, because as I said, everyone I find tends to start out with the Charlotte's Web approach, and they tend to miss things because they've got so many lines on the chart. Now, I'm just going to pause this camera. I'm going to jump back into Profit Source, and I'm going to ask, just give me 2 seconds. I'm just going to open up some windows in my office. It's thought it's a cool night in Sydney, but it's actually a fair bit warmer, and I'm thinking my wife's gone and turned the air conditioning off, because she does that when I'm not around. She hates the cold and likes the heat. Rather than turning on the air conditioning, I'm going to open up some windows. So give me 2 seconds. There's one. Alrighty. That's better. Nice breeze coming through as I oh. All right. So let's jump back into Profit Source. So obviously Newcrest Mining being the major mover, I guess, over our time together. So when we were last together, we were right at the point where we were just talking on the 3rd or 4th of November. We're sort of talking, yeah, that's the 3rd. So I think it was the 4th we were together. we're talking about how that was a trade you could have been potentially in, and there was a few of you guys who'd suggested that you had. We'd been watching that as a pretty clear place to watch for a low. Remember, we talked about that first lower top short trade, ran about 150%. We'd seen the market run up and false break that 50%, give us a little bit of an island bottom, double bottom there, some times balanced out. We saw that every day. There was lots of sort of things going, and really what we were sort of trading off around about that time was calling that sort of focus. We're doing some time trend analysis, remember, we're counting days up and days down. And we're sort of really focusing on that as being as a double bottom that we might potentially trade. Now, getting in, long the openers off that double bottom was certainly a doable thing. Long the openers that day, trail your stops in behind the close of that day potentially, or even just a third of the daily range behind there. Big gap up the next day, you could have then put some stops behind the gap. I guess the concern I had was that we've seen these big ABC ranges roll before, and then had some concern seeing them sort of not repeat. And I think from memory, without sort of remembering exactly what I said, is I sort of said, be careful. That first ABC, I was worried that we would get an even bigger range than that. Now, if I look at that as a swing chart, that was 361 as a range up. No problem, Graham. All right, I'll come back to you guys. All right, how are we doing? I'm fading, yep. Check my microphone, all right. I'm back with you guys. How's that sound? That a little bit better? Just let me know if that's working a little bit better. But yeah, no problem, I'll have to only work with one window open. There we go. No worries, sorry about that. It was great for me, but obviously didn't quite expect the wind to knock the mic around so much. So anyway, that's fine. We'll Yep, no problem, Des. Already part of what I'm thinking of doing. So yeah, already part of the discussion. So, all right, no problem. So, okay, we've solved the camera or the mic issue, so that's taken care of. So let me jump back in. Profit Source will start that discussion again on Newcrest Mining. All right, so what I was saying was that we were watching that double bottom around about this area here as a potential way to trade, looking at that as a first confirmation of the double bottom, and then what you had was a long the opener signal on the 3rd of November, gapped up on the 4th. Concern we had was obviously we've seen these big ranges before, followed by sort of ABC trades that have failed. So I remember I was sort of talking about, yeah, a little bit concerned if this got too far away and maybe trading it without sort of normal ABC rules. As you can see here, 361 compared to 471. This range, I think, was more within the realm of a range that this market could do. So there was that other one there, 548. It did, 548, then didn't give you much after it. 471 didn't give you much after it. So I think when you saw that 361 range, that should have given you a bit of confidence that that range was doable on the ABC, on the merit of that ABC. But I really expected that 361 range to be more like a 471 or a $5. So it was actually nice of the market to give us a potential higher bottom. What was good about that ABC trade, never closed the gap. Came back and sat right in that gap, which was nice. Nice little 38% retracement. And if you want a textbook sort of volume pattern, they don't get a lot better than that. All right. So obviously you had the market running up for 3 days, nice strong volume. On that reversal day, the volume dropped away, and then on that point C day, the volume fell away. So to me, that was hopefully one of those sort of ABC trades that you guys felt confident to jump in on. And probably get a fair whack at. So nice strong day to enter. Entered market touched 50%, and market obviously get running stops using normal milestones might have seen you stopped out under 50. Stops at entry plus commission would have been helpful there. Little inside day, and then it obviously gap down. Okay, hard to hold against those sorts of scenarios, particularly after 50%. So argument could be said, trailing stops under swing bottoms might have been a smarter place there. You should have walked away to break even or better. And then obviously another ABC trade was presented. So the second one came along. Bit of hard work gapping from B to C. You might be thinking, no good. But obviously in the context of where this was headed, the market actually did quite well. So out of that run there, depending on how you'd managed it, yeah, I'll come to you. I'm just seeing your message there, Robert. I'll get to the detail of how you guys handled it in just a second. I want to point out to you though, if we just put a swing overlay on that chart, you know, hindsight's a wonderful thing, but you know, the way I, you know, guiding you to manage it is if you looked at that as the strong low, which we did, which was early November, first ABC, and then if you just trailed stops underneath swing bottoms, you found that obviously, you know, stopped out somewhere up here about 36 bucks. You might have argued when it started to make the potential for an island top. Obviously, it's gapped up here. Maybe that would have been a place to maybe trail stops underneath the gap there. But anyway, you cut it, you know, we now have an island top that sits in the market. So just to highlight that for you. And that's interesting because Richard, obviously, with his forecast that he put together on the discussion board, said, yeah, watch around the 4th of December. So the top came in on the 3rd, gave you an island reversal top. So on that date, island reversal top, some confidence to potentially get short. Now, just to sort of take a look at what Robert and Graham said. So you went long on the 9th of the 11th, moved stops to entry plus commission. 12th of the 11th, then got stopped out at 13th of the 11th on the open. So yeah, on that one there, yeah. So bit of a bugger. And I guess in hindsight, one of the things that David would do, and this is actually a lesson from the Swiss franc trading lesson that David did at the in the master forecasting course, is remember how he talks about, even though the market's touched 50%, well, no, I'm talking like you've all read it, so I apologise. I know a couple of you have. David would, even though it's hit 50%, he'd still, you know, move things up and he'd trail stops under swing bottom. So in this particular case, had you got long out of the, and I guess the whole argument here came for getting long out of this point here, which was the 2nd of November, getting long on the 3rd, that would have given you some breathing room to just trail stops underneath your swing bottoms. Waiting for the first ABC trade, you know, obviously there was merit in that as well. Unfortunately, did enough to get you in, give you that one unfortunate day where the market did something silly, and it'd be really, I remember watching that thinking, how painful is that? Because look at the volume on that day, it's, you know, somewhat lower than the other day. So I was thinking, yeah, what's the chances of this now rocketing now that that ABC trade's been stopped out? And obviously that's what happened. So hindsight's a wonderful thing, but I just want to point out to you that I think with the quality of the setup that we had, double bottom, I think trailing stops under swing bottoms through that run wouldn't be too much of a stretch of the imagination. I don't think it's, you know, impossible for us to say that's a strategy that was far beyond us before we'd even think about getting in. Double bottom, strong area for a low. If you miss that, maybe trailing stops under swing bottoms. And I guess another way you could have managed it was using David's 2-day reversal rule. So allowing the market to come 2 days against you. And so, you know, allowing the market to come 2 days against you, as you can see, the only time it's come 2 days against you is back down here. So, all right, let me come back to camera. So Robert said, yeah, typical, you're in a meeting all that day and that's why you moved your stops to entry plus commission. Yeah, look, you know, I guess learning exercise, you know, and you know, you can't always be there and you can't always have stops in the right place. But just, I guess the real lesson that I want from what we've just seen there is that adjustment to managing ABC trades and swing trades as a whole, managing stops under swing bottoms, I think was a fair assessment in that case. So I don't think it's too much of a stretch of the imagination. I can imagine getting into the next second ABC trade after you got stopped out of the first and gaps from B to C, but that's where going to that bigger picture might have been helpful. Lynn's saying here, yeah, work gets in the way. I've always said work does get in the way. Yeah, and yeah, Graham's saying you can only trade end of day only. I've always said having a job does get in the way of trading, so that's why I don't have a job. I have something I enjoy, and I'm in a lucky position. So I fully appreciate where all you guys are coming from, but I don't have a solution for that, and I know you guys aren't asking for one. It's just a case of what can we learn from this and go back and take a look at it. One of the other things I think, looking for the bigger picture, as I jump back into that, yeah, can we swap? Yeah. I'm actually looking for a new chief strategist, Robert. So if you're in the market, I'm sure you know we should talk. You have to know what a chief strategist does, and I don't. So I'm looking for one that's all taken care of. So someone who's got prior experience in the role. All right, let me jump into what I'm seeing this market doing right now. So a couple of things I want to do, you know, is take a look at what the swing chart's telling me. So let's do that first. So obviously we've seen higher tops, higher bottoms, big extension to the upside. We've seen a big, you know, sell off to the downside. Could we argue that maybe that's a little bit overdone? Yes, there's some, you know, a case for that. Looking at what the US dollar is doing, I think that's the real driver. If we get strength in the US dollar, we're going to see a weakening gold price and vice versa. We're sitting right on that 50%. Maybe we're going to get that one more down day, US dollar strengthened for another session. I'd have to look at that 405 range and say it does look a little overcooked. You know, it's done 441 there, so I guess it can do those ranges to the downside, but it does look a little bit large. You are really setting up now for what the potential could be as a lower swing top, but as I said, 405, I think it's unlikely to repeat. You know, 441 did basically did 50%. I'm looking for the sizes of downside ranges, 280. 271, 251. Yeah, so you really are talking an extreme. So I would, if you were looking to manage a short trade here, I don't think you could be using that as a reference range. I think you'd have to sort of, you know, trail stops behind tops or whatever you plan on doing in that particular case. Weekly chart's still up, and I think that's the major bias. Okay, so, you know, 405 is still less than 568. There's that little double bottom. So I guess that's what I'm following at the moment. You know, if everything ran to 200% in one straight line, double tops and double bottoms, I think the world would be an easier place to trade. So I'm still sort of committed to the fact that I think that double bottom definitely one that we can take a look at. It sort of ran to about 125, 133%, gave you an island reversal top on that date that Richard was talking about. It's come back and sat on the 75%. Once again, maybe if it came back and sat on that 50% point and gave you another double bottom, but I'd just be watching, you know, 42.88 and 40.05 into the near future as being prices to watch. And I'd be watching for them around about our seasonal dates. We know, you know, we've done some work on seasonal dates on Newcrest Mining, so we've got a little bit of intelligence there. We should know what our seasonal dates generally produce around the December period, and you know, that would be certainly one thing we'd keep in the back of our mind. But you know, I'd be watching these milestones as important places to watch. And once again, we're caught a little bit with resistance cards because we are getting very close to double top territory. So if I go back to this picture, what I wanted to do. Go to this picture, we've got 40.05 and 42.88. I now line those up. You know, you've got 40.55. So what I was trying to do is see if that 150% lined up with those old tops, or whether, you know, 200% is going to give us a fresh high, 150% is going to bring us very close to those all-time highs. So they could be some price targets if we do get a swing up again that we could be looking for. And a couple of things we always need to take a look at where we sit on the bigger picture. So using the, we could do a ranges resistance card, but it's going to be less useful to us, unfortunately, because we are, you know, hovering around highs at the moment. So 87.5%, 75%, they haven't come into play. So really where we'd be most interested in terms of getting prices for highs, I think we could take a look at is using our lows resistance card. I'm just going to set up our preset Gann square. I'm going to use two major lows. So I'm going to use this one here as the 2008 low. So that's 1655. So if I use that, we've got a situation where Well, that top for the double top came right in on 125% of that low. It should be more than that. Yeah, no, that's 100% of the low. 125% came back, sat down there. We haven't got anything to really give us credence for that top off that resistance card, and we're not really sitting on any sort of support at the moment. It's sort of fallen through there. So I guess the argument you could have here is if the US dollar does get really strong and shows no sign of stopping, and if we got the market coming back and sort of doing something like that, where you had a really strong reversal day there, and you could start to maybe call that an A, that a B, something like that as being a C. Well, we could see maybe a short trade running into the middle of the month, and then maybe we're going to see a low around our seasonal date if we can find some other time harmonies. But there'll be things I guess we can start to bring together over the weeks ahead as we run into that seasonal date. We can start to firm up if there's anything strong there. So we know that obviously that's one of our major lows to use. The next one we're going to go back and pick on is the all-time low, just to see if that can firm up our view where we're sitting in price. So our all-time low is $1.13. And I don't have enough. All right, so $1.13's a harder one to use, only because Newcrest is obviously doing that fairly well. Well, you've got some pretty strong reasons why. If I do that top there, 39.75, find my calculator again, just in front of me. I just want to work out how many multiples of that top, or $1.13, go into that top. So I'll get a calculator. So 39.75 divided by $1.13. It's about 35 times the low. So market's made a top very close. If I stretch that out there, it won't be exact. So yeah, it's about 35.25, which puts us to where we are there. So big signal day on the 3rd, which was, as Richard said, was a date to watch, getting into the weak part of that next square, and obviously the market's broken down from there. Now, $1.13 as a move is obviously going to be a bit hard to work with. So here's an instance where using a resistance card, I'll just open up a new chart because that'll take forever to get back there. Where I'd be more comfortable to probably go to something that's a slightly larger multiple. So Wayne, you were talking about point sizes with squares. This would be one instance where I'd probably wanted to see where we're sitting on the bigger picture. So I'll make that $1.13, my starting point. But instead of making it 1 cent, I'll actually probably make that 10 cents. I won't need as many. I'll still need lots of columns. I won't need hardly any rows. And what I can do is just drag across to where we are in the current market. And what we're seeing is each of those little orange big squares should actually now be $11.30. So the real major point. So what you, oops, if I just picked two of our orange lines, let's say that one there, I'll turn that into a blue line, and I'll pick on that one there. Distance between those 2 points is going to be 10 multiples of our low, so we're actually going to see that that's $11.13 as opposed to $1.13. So really what we're seeing is 10 strong, or 10 squares rather than 1 square of the low. So what it tells me is that, sitting on that point there obviously made those pretty strong areas to watch for changes in trend. I'm always pretty tight on the mathematics. I don't go changing them to numbers that just curve fit the market. So we're always going to use numbers that relate to mathematical principles. 5 cents is one, 10 cents is another. So moving in multiples of 5 or 10 would be a way that you can certainly handle that. And we'll do a lot more on that when we talk about squares. All right, so potential for a little double top coming up. We're sitting, relatively, we have some places to watch as far as our double tops milestones repeating in price, and we also have, some of that 200%, targets. Got to get through that top to get there though, so that would be one that we'd be watching. Obviously, trailing stops through this run here would have produced a good result, but obviously not the easiest thing to do. Take note that that is an island reversal top, and obviously this market can do islands on a regular basis just because of its gapping nature. So that's going to require a fair bit of energy to close. Sitting on a 50%, that's dramatically out of balance as far as time's concerned. So this is my, I guess, concern for this market is that, the market's run up 30 days, bottom to top. So, you'd be happy with that as a time frame to watch. And it's run back all of about 5 days. So if I wanted to sort of, project a time frame, well, 50% of that time frame, 45 days off that bottom is going to give me around about that seasonal date. So I think we stick with the swing chart as far as what it's telling us, and probably around that middle December date would be the next area that we could keep a close eye on. So, all right, so there's once again Newcrest Mining with 100 different concepts thrown at you in one phase. That's kind of how I'm seeing it at the moment. So just let me clear that chat. So how does that stand with everybody? Let's open the discussion on Newcrest Mining, and then we'll do the Aussie dollar. But questions, comments, or queries as far as that's concerned? Happy with the approach and the analysis? Maybe not happy that you didn't get to trade the whole run, but use that, as I said, as an exercise for next time. Anyone seeing it differently? Anyone a super bear on gold? Should we be setting up for multiple short trades and looking to short this market back to zero? Or I'm interested to get your views and thoughts as this is unfolded. Which speed angles would you be watching? Yep, I'll jump back in and I can certainly play around with those and be happy to do that for you in a second, Graham. I guess when we talk about geometric angles, we're happy to pull that apart, when we get into that bit. Simple clarity. Thanks, Des. Appreciate that. That's I try and make it simple. Hindsight also helps. It's very easy to trade last week's market. It all seems simple then. Yep, and he's happy. That's good. A good run through. Shoot out if there's questions, guys. Let me know. I'm glad that you're happy, which is good. Happy and understanding is fantastic. Obviously happy though to have a discussion about where it doesn't make sense if that's the case. All right. Well, we seem happy. I'll happily move on. Let me know if it's not. All right. I'm going to assume that silence is consent. So I'll assume that everything just made perfect sense. And you'll all be able to, recite that to me next week. So I gave you homework and said, all right, give me a one-pager on all the analysis. You'd be able to handle that all accurately. So I guess synopsis is this, is that gold, I think, needs a pullback before it can really rocket to higher prices. So some continued volatility, maybe even some sideways. This Newcrest Mining's way out of balance as far as time's concerned. This run-up's been 30 days up. If it could do 30 days up and 15 days down and sit on 50%, that would make me a whole lot happier. It's come back 5 days and it's already managed to hit the 50%. To me, that tells me it's overshot to the downside and it's likely to have a bounce to the upside. But I still would be very much watching that sort of 50% time frame, be it 15 days. The fact that it pushes it around about our seasonal date, maybe this market's going to be a bit choppy and volatile until around the middle of the month, and then we might start to see some continuation of those trends. Then we've got those 150, 200% milestones in play off that double bottom. So all of those things I think are ones to keep in the back of our head. And a little bit of, sitting on the sidelines at the moment is not a huge problem until this market gets a little bit of certainty. That downswing though, that $4 current downswing that would be an A to B range, I'd really see that at a stretch repeating. So, if you were going to trade a short run, you'd want to, maybe get in by 25, get out by 75, something along those lines, only to ensure that you're not putting all your eggs in one basket to say that what has been a massive oversold or a massive movement to the downside. We can't call it oversold yet because it could keep going. But a massive movement to the downside in such a short period in time, to me, the rubber band's been a bit stretched too far, and it probably needs to flick back the other way, and that's probably what we'll see, particularly if the US dollar, like our analysis led it into, if the little bullish runs that we've seen in the US dollar have come to an end. We should see obviously another down leg in the US dollar. That'll make gold bullish, and that should push Newcrest the right way. To the upside. I shouldn't say the right way. Every way is the right way as long as you set the right way. Des is saying recent market has reinforced the need to be patient. The question is, can we do that? I made the comment that right at the start, Des, it's sometimes handy to have these things in your life that divert your attention from the market. I've just been quite lucky that it's actually meant my attention's been diverted at a time where the market's been doing next to nothing. So usually when I'll come back to. I've made the joke a few times when you take a look on the oil chart when both my kids were born. That's the first when Miles was born, I think oil dropped about 35%, and then when Oliver was born, it dropped 80%. So I'll point out to you that because Oliver was born on the 8th of July and the top came in on the 13th or whatever. So the 11th of July. So as I keep joking with everybody, everyone wants to know when we're having our next child because it generally means bearish markets for oil, but yeah, Graham said planning more kids. Yeah, don't worry, I'll let you know because I won't miss out next time because obviously I tend not to do too much in the market when your kids are brand new and born. So yeah, I've missed out 2 times, so I'm going to have to get on top of that. But all I'll say is that the patience question is go back to simple philosophy. At the moment, it's about quality of setup. If you can't get a quality of setup, at least reduce your position size. All right. So I've been trying to chip away at a few things. Those guys who get ABC Bulletin, you'll see we've had a couple of losses, and I've been chipping it away at a couple of things. They were great setups that just didn't come together, but I've been very comfortable to sort of push position sizes that were more conservative whilst we're going through this market. And it's certainly not a time to be brave with massive position sizes because, yeah, you could be a hero, but you could also end up just ripping up dough quickly. So all I'll say is that, yeah, patience, Des's question, can we do it? Well, you got 2 choices. You'll either, the market will teach you the lesson. You can either go through it once or you can go through it 100 times, and eventually, something will finally click. So, all right. But yeah, it's an age-old question. Patience is a virtue. All right, let's take a quick squiz at the Aussie dollar, and it's had probably a less of a spectacular move than the Newcrest mining market. There's been less going on. When we last were with each other in class, we were on the 4th of November there, and that was a setup that I'd been watching and was looking at that on a bigger picture ABC. So it come back and sat right on 50%. The argument would have been maybe waiting for a higher bottom. I actually am quite comfortable to trade those as just a standard ABC setup off the bigger picture. Obviously, it requires some management techniques that are a little bit different. You can't sort of set them up exactly in the same way, but that to me is just a big picture ABC. We had our little update which confirmed it. The market actually did push higher, and it did get to that 50% point, and then it fluffed around and then basically came back down. So as I mentioned right at the start of our class tonight, had you been in that run there, you're either sort of been stopped out through here and you've had a break even or a slight profit, but it did enough to get to 50%. So if you're managing milestones off that move, you were definitely in a situation where your stops would have been moved higher. Stops under swing bottoms, something along those lines might have, that outside day would have produced a swing on that update. So if you'd gone stops under that swing bottom, you would have been stopped out a couple of days later. I was liking that range as far as that 100% was concerned because that was going to give me that, about 96, 97, 100% repeat, which I thought was quite doable. Obviously, since then the market's had different views. We've had interest rate rises and all that sort of stuff, which haven't really been flown on or flowed onto such a big move in the Aussie. It was 19 days up, and then I guess from there we had about 19 days. Price gave you, about the 20, the low there's the 20th, and market didn't do too much out of there, and it's fluffed around. There we had that big outside day. Or big down day, and Graham's saying it's coming up as a 3-day ABC. I'm assuming long. No, I'm on. What am I doing? Can be short. Sure. All right, I'm not quite seeing it, but not to worry at this stage. I'll dig around later. So, look, the market, like all of our other grand markets, has really been sort of benching through that sort of sideways period. And, you know, been a tough environment for us. Yeah, okay, set for 50%. Okay, that's probably the reason. Thanks for that, Graham. We've sort of been, you know, floating through this sideways range and, you know, from about 89 to 93, 94 now. That's a 4-cent move. Remember that, you know, that adds up to being, you know, something sizable. You know, we're not talking a really, you know, tight sideways range here, but, you know, for me at this stage, I think, you know, what we need to wait for, even if we drag it down to there, call it 93, we need to wait for some direction from this market, and really what we'd be watching for now is a breakout trade. If it breaks out underneath that low, highly unlikely. Maybe even if we get set from potentially double bottom, comes back, double bottoms off there and takes off, or breaks out through these tops. But I think we're going to get a little bit more of this sort of whipsawing sideways stuff. I think we need to wait for the US dollar to settle down again. Obviously, it's had some strength, so therefore it sort of pushes some pressure back onto the Aussie dollar. Commodities falling, that tends to make the Aussie dollar go with it. At the moment, we do have a lower top, lower bottom scenario, so we do have a confirmed downtrend, expanding ranges to the downside, expanding to the upside. Weekly trend, though, is still up, but getting a little bit weaker. The pullbacks are starting to, you know, through here, they were 50%, 50%, 50%, and now we've sort of had a, you know, probably about a 70 or an 80% pullback. So all I'd suggest there is that, you know, waiting for potentially that breakout to give us the direction of what we're interested in. Once again, highs resistance cards haven't been overly helpful because, ranges resistance cards, we're probably sitting right on about 87.5%. Certainly not on a 50% or anything silly like that. Yeah, there we have it, right on that 87.5%. Fill that in so you can see what I'm talking about. So until we get a breakout through there, it's hard to see, you know, this market, you know, wanting to go much higher. First higher bottom above that sort of stuff would be good confirmation of a trade setup. So time will tell there. 75% is obviously the milestone underneath that. So we're nowhere near that. So we, you know, I don't see it getting back to about 88.5 cents. That, you know, the US dollar would have to just fly through the roof. So I guess we're mainly, if we're thinking more about tops rather than bottoms, we've sort of got to get back and focus on our lows cards. So if I get in here and focus on the October low from last year, 4 decimals, need the low there's 59.75. So I'm making the box size the same as my start value. I'm going to not need anywhere near too many. But at the moment, we're in a scenario where we've done about 50% of that low, and that's where we've actually come in and double bottomed. So that's where we're sort of holding, and the market's come down, bounced off that. So I think that's obviously going to be a smart area to watch as continued support. And then obviously we've got to wait for that 87.5% point breaking out through those tops. Could get a sideways market develop, and yeah, a little bit hard to trade that sort of environment. So a little bit of a tougher one. I guess bigger picture, always sort of going back. I'd be looking at, you know, just to get back and do some basic time stuff. Looking at what our balancing time relationship says. So it's about 105 days down, just looking for repetitions of that. There you go. I love it when a plan comes together. So, you know, 10th of February this year, gave us a small top. 26th of May, well, the top came in on the 4th of June. No, can't call that one. 8th of September, not much happened. And then 105 days later, you've got about the 22nd of December. So what seems to be pushing in around about that seasonal date. So I'd be going back and thinking, all right, seasonal dates. 1 year ago, what happened on that date? Well, there's the 26th. A little bit of a sort of, you could argue pulling it either way. You could argue that's a turn. You could argue that's a turn around the seasonal date. Go back and keep looking around December's. We get a turn there on the 18th. Strong run out through there. December the year before. I'm just trying to firm up, if I got anything working here around about our seasonal dates. Top came in wrong top. So yeah, about the 18th, we're getting a lot of turns. So, a little bit early on seasonal dates. So I guess the good news is that there's stuff that does tend to happen around the middle of December, in a nutshell. So there we have the 27th, and the top before there's the 12th. So you're definitely getting runs around that period in the market. I can keep going back. I guess just to line it up with the master time cycle, we could probably go and look at what happened 10 years ago. If we happen to get a turn in December in late 99, too much there. So you sort of got a move out from 3rd of December into a run around about the 13th of January. So we got a low somewhere around the 3rd of December. Can't do because obviously that's a top. Don't mind me. 3rd of December, early, that sort of tells us December into early January runs. So yeah, we haven't really come up with too much science in that. It's just more a bit more conjecture. As I said, I'll need to do a bit more work in that just to firm up for both markets whether or not we've got something happening in for December. And if I have a look at middle of there's 89. There's that 18th again. So 18th of December, 18th of December, 18th of December. So can I throw it out there to you guys at this stage of the game? But I think we're caught, certainly in a little bit of sideways, tougher market to trade, waiting for some breakouts on the upside or the downside. But just a quick little synopsis, that 87.5% sitting on the highest resistance card, I think, or ranges resistance card, I think is important. Doing some more work on the all-time low would also make sense as well. But just running out that balancing time, 400% of that 105-day range, gave us around about the 22nd of December. Now, I haven't checked to the end of the month yet because I don't know what days the weekends are on. But if the calendar, there we go. So just taking a look at December, the 18th is a Thursday, the 19th is a Friday. You've got the 20th and the 21st and the 22nd, which are Saturday, Sunday, Monday. So if you pull it sort of, to the end of the week, 18th and 19th is a Thursday, Friday, 22nd, 23rd is the Monday. So Monday/Tuesday, that's all US time, of course. Will be dependent on because it trades in the US. So the 18th is definitely an area that you might be waiting for a setup somewhere on or around that date. Just doing some high level stuff, trying to lock it in with what we've been doing in the past without getting into re-lessons on all the things that we've been watching. So, all right, once again, let me throw it back to you guys. We've spent a couple of hours talking markets now, so hopefully it's re-engaged the brain. If you've fallen out of a little bit of a routine, hopefully that's helped you get back into one, because that's the level of work that we should be doing on our markets. And obviously, because we've had such a break, we haven't been able to watch that stuff unfold. Hence, we've needed a bigger discussion tonight. But I hope you found that discussion, worthwhile and valuable, because I think there's a lot of good stuff in there. I'd definitely go back and go through the work that we've just done when you watch the playback, and just make some of the charts that we've created, and just make sure you cement some of those lessons. I think there are some important ones. So I'm just going to bring up my PowerPoint presentation, but happy to take any questions that you might have on either the Aussie dollar or the on Newcrest Mining as it sits, plus the other stuff that we talked about. No, we're happy. All right then. Well, as I said, I'll assume that your silence is that you're moving along and everything's progressing well. All right. So what I wanted to do tonight was really just commence our discussion on third dimension work. So as I mentioned, you've got just standard geometric angles, you've got squares, you've got boxes, you've got speed angles, you've got what have I missed? Squaring high, squaring low, squaring ranges. So third dimension stuff is something I really got engaged in early. I just found that third dimension work clicked. I like the idea that time and price were the same, and you watch for markets to reach their balance points or counterbalance points with regards to that work. So I guess we've already talked about that. I guess when I talk about squaring time and price, just to revise our work, we sort of say that it's the third dimension as far as the technique's concerned. David actually tells us in the Ultimate Game course, if time and price could not be treated as the same, you couldn't square them. And that's a concept that tends to ruffle feathers early on, is that can we really treat price and time as the same thing? I'm comfortable to say yes, but it did take me a fair while to come to that conclusion. I always thought price was more important than time, and then I actually went through a process where I thought price and time were equal, and now I know that obviously time is the most important thing, but that's the standard development, and it's logical that that's the process it takes. So we can talk about squaring time and price to calculate pressure dates, and that's something that we're going to do over the coming weeks. And obviously, we really want to focus on just being able to judge strength and weakness and get a market set up accordingly. So the easiest way to measure, obviously, the third dimension, or squaring time and price, is what's called a Gann angle, or a geometric angle. First studied, many traders believe that they're a simple trend line. There's a lot more to it than that, and in Market Wizards, in one of the chapters there's a bloke that just tears Gann angles apart and says that they can't work and all of that sort of stuff, only because he doesn't understand how they're constructed. He sort of says where Gann says a 45-degree line, and he sort of wants to get out a protractor and make sure it's exactly 45 degrees. Well, we know that a 1-by-1 line will always be 45 degrees as long as it is on a scale that's consistent with that. If it's on a compressed scale, then it's not going to look like a 1-by-1. It's 45-degree line. It could look at a different angle. So we're obviously going to use them as a trend line, but we're going to use them as a tool to rate strength or weakness, and we're going to say obviously geometric angles are the easiest way to turn time and price into one technique. Just as a quick revision, when I set these up, everything fits in there, no problem. Drag that out. No, that doesn't help either. All right, somehow in the importing, it's managed to stick that E out, so that should mean price, and obviously that's Tim with an E. Okay, so price and Tim, and obviously we take a look at a scale whereby if we those colours just aren't animating. All right, let me move through this, and I'll just draw you a picture. How's that sound? All right, I'm going to give you a whiteboard, and I'll actually draw you what I was going to show you there. It all look good in the setup, I promise you that. All right, so I'll use one of these nice big fat markers. So really what we've got is two scales, and that's not a particularly straight line, but that'll do. We know that if a market runs up for 100 days, runs up 100 points, we call that value of 100 in terms of days and 100 in terms of points or price. We could argue that that line has run out at 1 unit of time to 1 unit of price, hence we call it a 1-by-1 line. Gann said the most important line or most important angle is a 1-by-1 line. We're obviously also going to focus on 2-by-1s and 1-by-2s, whereby the market's traveling at more points per time or less points per time, and obviously they're important. Now we can use these in single sense, in the sense of putting one on at a time. Often it's easier just to put a Gann fan on and you can see which ones are intersecting with the market. The problem that brings is it sort of starts to hit everything, and we get very excited, and we may actually have nothing to work with, but we get excited about having nothing to work with. So I guess sparingly we want to apply these, and we want to sort of take off the information that's not working. So I'm very happy for you to apply Gann angles on your, or Gann fans on your chart. But what would make sense is to sort of take off the information that is not being used by those lines. So for example, if the market's above or below the lines, I tend to delete them. Now, Des actually asked me a question, to talk about, I guess, trading days and calendar days, and how they can sometimes give conflicting signals. And here's the problem with the use of angles. If I go back to the presentation, is that we can get conflicting views, and I guess the way that I've always dealt with it is that I've tried to use what David calls the proven servant rule. So what's worked for you in the past will work again. So if something's been working well, that takes a higher precedent over a new angle that might give you a conflicting signal, and I'll embellish, or not embellish, I'll develop that as a concept as we go through. So we look at the relationship of price to time. Gann angles run up at a set rate of price to time, 1-by-1s, 2-by-1s. We've spoken about that. I guess here's where the point gets really convoluted, is that here's where you start to get an expansion of what seems like a simple technique, which is just sticking an angle on a chart. And now we're starting to be able to apply them in 4 different ways. So they can obviously be drawn up and down, all right? So they can be drawn up from a low and down from a high. They can also be drawn forwards and backwards. Okay, so we use them as a projecting sense to rate the current market or to go into the future. We can also go back historically and say, well, based upon are these two in alignment based on previous tops or bottoms in the market. And then you've got this next little function here which says that it can be drawn using calendars or trading days. Now, that as an assumption is gives you essentially 4 or 5 different ways that you can use this information. And Des makes a great point, is that what if it gives you 5 different outcomes? How do you interpret those? How do you weight them more heavily? Now, we haven't even got into the concept of maybe changing point sizes. Okay, so you've got 5 different outcomes, and then when you change the point sizes, you've now got another 5 different outcomes. So potentially 10 different pieces of information in the market, and how do you weight those accordingly? So I guess what I say to people when they get started with setting up a market is you've got to go and put angles or a Gann fan on every major top or on every major bottom. Remember, how would I define major top or bottom? I'd probably say using the turning points filter. Just squint a little bit and see for the pointy and the spiky bits that stick out. But you don't need to run a Gann angle or a Gann fan off intermediate lows, like a weekly swing bottom or a weekly swing top. The reason being is by doing that, you'll come up with so much information that you'll get confused. So really, monthly turning points are a good place to start. Once you then know where those angles are and what's working, you can actually, if you're keeping a hand-drawn chart, after you've decided that it's working pretty well, then it can maybe make its way onto your chart. But at this stage, let's not try and get too caught up in having angles off every major top or bottom. That being said, I have run angles off every major top or bottom and every secondary top and bottom on oil, and I know the ones that work best. So therefore, I can exclude. But it's a little bit of a process. You've got to immerse yourself, and you've got to swim through, choppy waters to get to the other side, so you can actually know what's the quickest route through. So I don't have any real clear tips as to what how you rate them as one being more important than the other. But the more times the market intersects or hits with that, obviously then the greater it weights in your level of importance. Once again, apologise, it's chopped off that image, but if you haven't got the commodities course, this is just an extract. You've probably seen it from your Gann Mastery manuals. It's actually in your Gann Ultimate Gann course from memory. If you haven't got the commodities course, I would say get it. The lesson in many ways that I got the maximum benefit from, and I'll share with you what I got from that David doesn't necessarily teach you through the Ultimate Gann course, is zero angles, is something that Gann talks about. And I found that was the first chapter in the commodities course that I tackled, because the commodities course is not a book that you read from cover to cover. It's really technique driven. So I was doing a lot of work on third dimension stuff at the time when I got the commodities course. And so for me, that was the first chapter that I turned to. And there are a couple of things in there that Gann gives you that just gives you a different way to look at it. So I'd always encourage you to have that sitting on the shelf. If I panned around behind me, you'd see mine sitting on the shelf there as well. So going back to this one, this is from Gann. Gann talks about the 45-degree or the 1x1 line being the most important. We know that for a fact. Obviously, then says the 2x1, the 4x1, they're the most important angles. But it's a bit hard to read that. I can see. No, it's not too bad on that screen. He also talks about here markets that indicate a decline. So when it breaks an angle, we should expect it to decline to the next angle below it. But I can't find anywhere where he says when it breaks above an angle, it goes to the next one, which it does, but he just doesn't state that. So there's a little bit of things that obviously he leaves out and you need to put together. All right, well, we're not going to do the thank yous just yet, but that's just, I've just put that in there. I know many of you do have the commodities course. And so, in conjunction with what we're doing, if you haven't yet, or you haven't recently picked up Gann's lesson from the commodities course, David's notes are through it if you've got David's version, and he does make a couple of little subtle hints in places where he says things are important. So if we jump out of the PowerPoint presentation, we sort of talk about how we're going to set up our markets. Really, when we talk about major anchors, you guys shouldn't need any help in me directing you to major tops and major bottoms. So for me, the birth of the contract, the all-time high and the all-time low are 3 of the major reference points that we use for the creation of angles or the placement of angles. I'd also be running off the most current cycle top and the most current cycle bottom. And all we're looking to do is really firm up, I guess, what we've got in context of what's working in the market. Is it strong or is it weak? So what I'm going to do is I'll jump into Newcrest Mining and the Aussie dollar and sort of show you some of the things that I've set up. We don't want to get into having all of these angles running off tops or bottoms. I guess the only way to get clarity in this is to do the work yourself. I know when I hear Tim talk about soybeans and running angles off here and running angles off there, or Matt talks about, the yen, and even with Noel with the SPY, because I don't do as much work on the SPY as what he does, I get lost when I hear them talking about it. The only way that it really becomes real for me is to actually go in and place the angles. So I guess I'm going to, we'll do our couple of markets. I might show you some stuff on oil that just because it, very, relevant to my thinking as the market of choice. And then I'll throw it back to you guys, obviously, for questions for Q&A. Des, haven't really fleshed out your question, so give me some feedback as to what you need, particularly if there's some examples I can, that we come up with, and just, open it to you guys. Tonight's not meant to be the complete discussion of everything to do with third dimension. It'll just get us started, and that'll lead us into some more work on speed angles and squares and boxes and squaring time and price to get pressure dates, which we'll pick up over the coming weeks. All right. So jumping into profit source, as we just mentioned, we'll kick off with Newcrest Mining. So I guess looking at a chart, working backwards, where would be places? I'm just going to put some circles around places where I'd consider running angles from. Obviously, major top, major bottom in terms of the cycle. I'd be considering, of course, the all-time low. So let me just drop a little circle on there. So we have the all-time low. Obviously, that happens to be the all-time high, which is our cycle high. And of course, I'd be considering using the birth of the contract as well. Now, this is some of the stuff you get more from the commodities course than you do necessarily from David's Ultimate GAN course. He does obviously talk a little bit about it through the MFC, the Master Forecasting course as well. So first and foremost, I would generally, picking a point to start with. When I use the birth of the contract, I'll generally go and get the GAN fan. Now, here's the problem. Do I use the higher the day, the lower the day? Well, I guess here is one of the areas that I'll come back and talk about zero dates. So I might leave that one alone. Let's just work on actual prices to work with, and then I'll come back and cover that off. So $1.13 from memory is the all-time low, but we need to be accurate in terms of price as well as time here. So I need to get the date right as well, 3rd of December. Oh, isn't that interesting? 3rd of December, all-time low, and current top in the market, 3rd of December. So anyway, we've seen it before. I know it's not exactly 10 years apart, but if that's 97, that's 12 years apart. Oh, there you go. So 1997 to 2009, 12 years to the day. Anyone want to tell me how many months there are in 12 years? You guys did the tough mathematics. Yeah, 144, prize for everybody. So is that a number that we've seen before? I'd hope we could argue that is a number that we can see before. So in setting this up, we're going to use our start date. Our start value needs to be accurate now. You can run angles as weeks as well as days, but we'll use them as days. Point size at this stage is going to be 1 cent. Now, greatest thing that I learned from David in terms of setting things up is to always color code your angles or color code bits on your chart. So as you can see, my 1 by 1 line is an orange, 2 by 1's red, 1 by 2's blue, and so I color code all of them so I can actually get it makes it a lot easier for me to understand what I'm looking at. So what I tend to do when I'm first setting up angles running out of an all-time low, I'd just be keen to say, okay, well, let's nominate places where it's been working. So you'd argue through that little area there, the market did find some support, some resistance was there. Market, once it broke back on the underside of the 1 by 1, wasn't much good. When it breaks through one angle, it generally goes to the next. When it breaks through one angle, it goes to the next. So it's following GAN's rules pretty well. Breaks through angles, not getting to the upside. Market sort of held it like a rail through here on that sort of pink line. That top there squared out pretty well. I don't know about you, but if I could get back in the time machine, back into 1999, 7th of May, market hits that top and then gives you an island reversal, then gives you a first lower top. Now, these are the sorts of trades that we're all interested in. So if I sort of pulled that apart and called that an ABC, well, I'd say it's only gone to 75%. There was I thinking it'd run a little bit further, but you know, nice big gap down, nice island reversals, sitting on an angle. You know, it's one of those things that you could argue would be the sort of trades that we're most interested in. You know, we're seeing periods where it's holding, but it's certainly false breaking on the odd occasion, so it can hold a little bit above the angle. So I'm learning already that I probably should not just go long or short based upon it breaking the angle. I should wait for confirmation. But looking at that, I'd say it's given us a fairly reliable signal. That top there was pretty well called. What was a top then became a bottom. Just seeing that looks to me like very close to a 50% retracement. No, a little bit less, 37.5. Came back, sat on an old top, sitting on an angle. There's your first ABC long. And look at that, that's an absolute rocket. So that one went to 200% or 150%. So looking at that as a setup, you know, you had some price going for you in terms of a retracement. You had it sitting on that old top. But the context of that point A sitting on a angle as well, which had been running off the all-time low, would have got you particularly red hot. Looking at point B sitting there, point B is, you know, on the underside of that angle. You might say, well, I'm going to leave that ABC trade alone until it gets above that angle, and you would have been vindicated because you would have seen that market, that third trade fail, running into 75% into that angle. That might have been a good place to jump out. So you can use angles as places to, you know, help you get in and trades and manage trades into. So just keep, oops, push the wrong button here. It's firing up the symbol tree. There we go. Turn that off now. So I'll get rid of the ABCs because that just clutters it all up. So looking at that area there, sort of little double bottom there, market took off. So look, I'm comfortable to know that these angles, well, squared out those tops pretty well. You know, market was pulling up short from the angle. That's a little subtle sign of strength. Market sat right on it on 25th of the 10th, 2005, took off, had another crack at it. So came back and, you know, if I sat someone down from the world of technical analysis, they'd swear that all we've done is drawn a trend line there. But we can argue that it's a lot different, that is in context of time and price being in proportion to each other. So the actual all-time high had a couple of little false breaks. Now, once it broke back under the one by one there, you'd pretty much only want to be one way in the market, and it sold off from the one by one and it came back down to the one by two. So I think we've got enough going for us to say, all right, well, this market is technically, you know, operating pretty well as far as angles are concerned. Now, that's only one use of the angles off one starting point. Now, it's actually below the one by one, so we'd have to rate this as technically weak, all right, because it's below the one by one angle, but, you know, it's a hard call. It's at an all-time high. Would it be fantastic if I could just, you know, for 2 seconds say that, you know, gold just undergoes a fantastic move and on or around about our seasonal date it hit, you know, that the underside of that one by one angle, that would make me, you know, just completely ecstatic. That's sort of saying $45, which I don't think is likely to happen, but that's certainly the sort of thing that I always am looking for. Now, this is one angle or one series of angles, okay? Now, of course, everything above the one by one is not much use to us because the market is not above that line. So when I'm setting these up, I would actually turn all of those off just to make my chart a whole lot clearer. It's going to take a long time for the market to get down to those angles, okay? So I'd be also comfortable to turn off 1x3s, 1x4s, and 1x8s. I'd have that as a saved chart page, and I just regularly update that and just have a look-see as to where we sit, and obviously get into the context of where that is. Now, that's a one. I'd create a saved chart page of this, and I'd basically put on here, you know, Gann angle, all-time low, calendar, angles. And I'd save that as a chart page, and I just have that as something I would cycle through regularly just to see whether or not I'm engaging those angles at any stage. Now, we know full well that we can go from a calendar day angle to a trading day angle. Now, that changes the pitch of our angles, but now what I have to do is go back and turn on those other angles and see whether or not there are other angles that are more useful to us than the one by one, etc. So, well, okay, well, I can get rid of 2 by 1 because obviously the market's never reached that high point. So I'll go and turn all of those off. So looking at a trading day angle running out, I'd go back and repeat the process and just see, well, look, how well has the trading day angle's been working? And, you know, sure, there's some periods through here where I can see it, you know, holding some lows there. It doesn't seem to have the same, you know, you've got another low there. Tops there. I was going to say, well, there you go, tops. I was going to say it doesn't have the same level of harmony, but, you know, when you dig a little bit deeper, a couple of lows holding there. So I think they're relevant. You know, that chart is relevant to us to have trading angles as well as calendars, so you can't dismiss one over the other. At the moment, the market, yeah, it really pushed through. Trading angle was holding those tops. Then it broke out, so it held once, held twice, broke out. Obviously, wanting to be long was pretty much the way you wanted to be. And what's it really telling us at the moment? Well, the market is holding above that 1 by 1 line, but it's not anywhere close to sitting on it. So it's a little bit hard for us to form a view on what that's telling me right now. Okay, so that's two ways that we can look at our angle. I'd save that once again as a save chart page. So I guess there's a few things I'd get you to, I'll sort of spell them out and then we'll go and do them. So the first thing you do is you grab all-time low, all-time high, running a calendar day and a trading day chart off that 1 point, okay, and seeing what works best, okay? So that's obviously the first and foremost part to that part of the puzzle. What I'm about to do next is something that comes from the commodities course where I'm going to take that all-time low, but I'm not going to worry so much about the terms of the price, which is $1.13. I'm actually going to more worry about the date, which we know is the 3rd of December. So what I'm going to do is actually create what's called a zero angle. So instead of running the Gann fan off $1.13, I'm actually going to run it off zero. So we do that for the all-time high, we do that for the all-time low. And guess what? We're going to do zero angles on calendar day charts and zero angles on trading day charts as well. So we've now just come up with two extra ways to look at the market. So at the moment, we could argue that the calendar day and the trading day angles off the all-time low don't intersect where the current market is. Now, it doesn't mean that they're not important. It just means that they're not currently useful to me. So save chart page in the back of your mind, you constantly, you know, bring it up and have a look, but it's not telling me too much right now in terms of rating strength and weakness. So what I'll do is I'll jump into profit source and just basically show you the work that we can do with the zero angle. And so what I'm going to do is I'm going to use that $1.13, sorry, use that zero date as being the low as being important. So I know the 3rd of December 97 is important. Instead of using a starting value of $1.13, I'm going to use a start value of 0. And what I'm going to start to look for is see, well, do the zero angles give me, I'll start on a calendar day chart, which I am. Do the zero angles give me something to work with? Well, I guess when I look at low, all those lows running through there, and then what was support becoming resistance, there's your sort of first little ABC 50% retracement, fell to the next angle, pulled that top, squared that bottom, squared that bottom. I'd say this is working, relatively well. Once again, not quite on there. Squaring out, calling for some support around those levels there. Pretty much hitting those tops. And at this stage, once again, we're not getting too much because we're right between angles. So that doesn't help me too much. So I'll turn it into a trading day chart. Once again, I'd be saving these individually just to, make sure that I had a reference to them. Well, there's a low, there's a high, squaring out those tops. So look, there's plenty of merit in these, and it's really about selecting the right time that they can be working for you. There's some tops. There's also some lows through there. It's also not, unfortunately, telling me too much currently because I'm in between these angles. Now, the point I'm going to make is, the next one I'm going to make, I'll come back to camera and share that with you, is the further you are away from your starting date, the wider the angles, or what I call the separation, is going to be. So if you're using a date from 20 years ago, you're going to find that your angles are exceptionally wide apart. So getting the market activity to operate within those is sometimes challenging. That's why we can't just say we can only use the all-time low or we can only use the all-time high. We've got to use some of the ranges that are more relevant to us. So we've talked about what reference points work, and then we've talked about the variables. So using, the price and then using them as a zero date. Now, I guess I'll throw it out there. are we clear on using angles as zero dates after that explanation? Because I'm sure some of you may not have done it that way before. Depending on who teaches the lesson at Gann Mastery, some of us teach it with some zero date stuff in there, some of us don't, depending on time really, because there's a lot to cover in that lesson. So does that all make sense? And is that something you're using currently as far as zero dates? I'm sure the guys who've got the commodities course would be saying, yep, we know all about that. So Debbie said, how do you decide what date to take the angle from? Major tops, major bottoms, all-time lows, all-time highs. So Graham said it's interesting not using it, but you will do. Yep, please do. It's a very, very powerful thing. All right, it's very useful. Let's just say that. So all right, so Lois is good. Okay, yep. So some are saying they haven't used it much, but they know about zero dates, which is fine. Okay, so what I want to do now is just touch on using zero dates from the birth of the contract, and then we'll start to tackle those highs. So what I'm going to do is disappear the angles there. This now makes a bit more sense when I go back to birth of the contract. We know the birth of the contract here is the 4th of June 1987. Pretty important day in the life of Newcrest Mining. Now, I wouldn't use the low or the high on that day, but I'm actually going to use it as a zero date. So I'm going to use the date that this stock started trading, which is the 4th of June 87. And I'm going to make it the start value being 0. So what it means is it's a true one-by-one line. It means that the market will run up the same rate of price to the same rate of time. So using that 0 angle. Now, once again, this is a calendar day chart, not a trading day chart. So actually, no, it is. It's now a calendar day chart. I looked a bit odd. So using the birth of the contract, this is really like, using the very start of the corner of your charting, paper. There's some lows there, picking another low there, squaring out that top. Seeing what else we come up with here. It's a few little tops there. That's not a great hit, but, it's something to note. Market's actually trading underneath our angle there. Market's sort of floating around there, not a huge amount from that. So the birth of the contract, squaring out that top. So that's on a calendar's approach. The trading day angle approach is quite different. It actually gives us a number of extra areas to watch. So as you can see here, squaring out that top, squaring out that bottom, squaring out that low there. So in this case, I'd say that the birth of the contract 0 angle generally is working a little bit better on a trading day chart than on a calendar day chart. So that could be a little bit of our focus going forward. I don't know, that might have been a bad low to call. Right, so it's pretty much sitting on that angle, and then as it pushes away. So that's kind of a little bit of an extra as to how I actually use 0 dates on markets. So we don't lose continuity, rather than jumping to the high at the moment, I'm going to jump into the Aussie dollar, and I'm going to do the exact same thing. I've had a question here where it says, given the timeframes, do I find, going over big timeframes, do I find switching the Gann fan to weeks has merit? I'm a bit of a purist in that way, Des. I probably I do them all on daily charts, and I don't generally use weekly angles. I like to have, daily angles on daily charts, and even if that means going over a big time frame, then I just accept that. So I must admit, I'm not a big user of weekly angles, but definitely a big user of daily angles. Now, just to sort of, do the same lesson again, but on the Aussie dollar. So you've got here the 13th of January, 1987. What I'm going to do is I'm going to run a Gann fan off the birth of the contract. So 13th of January, 87, but I'm going to start it at 0. Okay, so I'm going to start my progression all the way down here in the, I'll put a calendar chart. So zoom in. So I've got to zoom in, obviously, because it's such a big chart. All right, it's got so many years of history. Really what I'm looking at now is I'm just seeing where am I getting some major intersections. So market's sort of bouncing around there, not fantastic. Definitely held a little bit of an angle there, held through the angles there. Not a huge, use of it. And obviously because it's a fairly, interesting starting point because it's all the way, you know, we're talking here the Aussie dollar being 50 cents. So the zero angle here is working pretty hard to touch the market. Bit of support, bit of resistance, bit of support through there. That one, you know, I think you'd be pretty comfortable to say that if it only works once, but it works that well, you know, if you manage to pick up that low and trade out of it, you'd be relatively happy in conjunction with a lot of other things. You're not just going to buy and sell based on zero angles, but there you've got your calendar day angles, and if I take a look at the trading day angles as well, you know, you've got something to work with there. So all I'm going to say to you is that, you know, I'll come back to camera. So all I'm going to say to you is that the proof's in the pudding. So I'd really challenge you guys to start to work with those zero angles because they do give some insight. Keep very much the focus, though, that we're not going to trade off them singularly. All right, it's never a case of, okay, well, the market's hit an angle, we're going to buy it or we're going to sell it. But if you can combine that angle with some time and price reasons to trade, you've really got, you know, and that's why we use a variety of angles because they don't always intersect with the market. So what we're going to do is line them up with other time and price reasons that we have at that stage. So I found them very, very useful in that regard. And, you know, as I said, proof's in the pudding, getting out there and doing it. The challenge that exists with it is, as I said, lots of angles on a chart, knowing when to use them, having a memory of where they are and saying, I think I'm getting close to that one by one, etc. And I guess you've got to remember as well that the market, when it comes to the trading rules associated with angles, you've got to always, you know, caution is a good thing. So what I mean by that is that if the market breaks an angle once but can't close above it or can't close below it, then that's not as strong as if it sort of can break through and close above. So David's 2-day close filter, where, you know, we're waiting for a market to break through the angle and close 2 days above or close 2 days below, in the early days would be a very good sort of filter to build into your rules just to make sure you don't get caught on false breaks, because the market's not perfect. It doesn't have perfect symmetry. And when we're talking about time and price, what we tend to find is it's the market has lost motion. So what happens is it overshoots an angle, so it'll push through the angle before it can swing back the other way. So it's a bit like that rubber band. When you let it go, it does return to its mean, but it will wobble a little bit before it returns. So all I'd say to you is that, you know, you've got to build some rules around it, that 2-day close filter. So the market's got to close 2 days above or below those angles, or if that's what you're using as your main driver, or you've got to have other strong time and price reasons behind it. So we've talked about birth of contract, trading day, calendar day angles off the all-time, off the birth of contract of both Newcrest Mining and the Aussie dollar. What we'll take a look at now is we'll go and look at the high and the most recent low on Newcrest, and we'll do some stuff on the Aussie dollar as well, just to bring in some stuff that's more current in the market, and then we can probably talk about point sizes, and then that'll probably do us for tonight. So I know we are running a little bit long. I knew tonight would obviously be a little longer though, just due to our time for catching up. All right, so Newcrest Mining, the all-time high. So this one certainly has merit for us to run some angles off. If I pull that apart, I know the all-time high is $40.50. If I run down off that top, well, I can see that the 8x1, well, didn't really do too much for us. The 4x1 did a pretty good job in pulling that, you know, as some support. Resistance came in here at the 2x1. The 1x1 was fantastic at giving us an area to watch for, you know, an island reversal. I'd just be interested if I can line up on a Gann retracement tool. I was hoping that that would be like, you know, 75% or 80, you know, something where I could line up some price there, but not to be. So sitting right on that angle, there's some reasons there why that might have given you some confidence to think, all right, well, island reversal on a 1x1 off the top, you know, as it confirmed that island maybe getting short. Certainly been some support through there. Okay, support. Certainly some resistance through here. So this is where we sort of first got together on Newcrest Mining. So I'm not surprised we saw the market sort of hovering around what had been resistance. And then once it sort of broke out, suddenly we've started to find that it was some support. Now, if we put it into the context of that ABC that we just saw, you've got your A, B, C. To get into this trade, you're entering on the good side of the 1x1. You're entering on the positive side. So I'm not surprised it's used that as a bit of a springboard. and we've seen the market make its top. Now, here's our next challenge, is because this top that we're using is pretty close to where we are in the market. You're going to find that these angles aren't too far apart. We're only talking about $1 here, less than, $1 there. The market could basically, move very quickly through here. So less merit is given. This is where you've got to combine time and price. So, we've got the 3rd of December, anniversary of the all-time low, the work that Richard did, Island, we've got all these things, and now we're looking at it saying, all right, well, it's also squaring out off the top. So that also had some merit. Looking at a trading day angle, we could come back and say, all right, I'll get rid of those ABCs. Looking at that trading angle, we've seen the market obviously hold, have some resistance. The market's just stuck its nose today back underneath that 1 by 1. So you'd have to argue that this market does look somewhat weaker to the downside, or sorry, to the upside, because it's got its nose back under that 1 by 1. So these are just giving us little tools to be able to rate strength. Now, if you follow Gann's rules, if it breaks through one angle, it should head to the next. Maybe we're looking at that sort of, if we manage to get the 22nd, seasonal date at $31, or, if I follow that line along, 31 odd dollars, then you'd have a time and price alignment lining up with the, a seasonal date. That could be something to watch for. So we can run these forward, as we know. Just to quickly touch on, we can also run them backwards. And when we run them backwards, we square out with these tops here. So we get some harmony when we run them backwards as well. So that's always something that we want to pick on. Is run them forwards, run them backwards. So we know that that would be one that we would have, saved in chart pages with the right angle saved and working on. And the most recent low in the market would also be one that I'd be happy to have an angle on. But other than that, they'd be probably the only ones I'd be really working with. Need to get that right. So 1655 is the low. Now, here's a great example of point sizes being a problem. So if I hold that up, you can see that those angles there, all right, have held. Now, I was very much aware of that when I was looking at that as a double bottom. All right, I didn't really point it out at the time, but the fact that it had come back and sat on that angle, what was originally support had come back and been support again. I would watch for this market, if it did fall to the south side, to sit through on that angle again. It's worked once, it's worked twice. You could expect it to work again, and if it breaks through that angle, then that would be a very, a much safer place to be going short. We've got our calendar days, we've got our trading days, and that trading day is also squaring out with that top at the moment. The point I was going to make here is that we could argue that maybe the point sizes here are not as accurate as we should be, because we've got our 1 by 1 line all the way down here. So this is where you can start to maybe make a modification just to get the 1 by 1 line more interacting with the market. I'd maybe move it at 5 cents first. All right, and that obviously adjusts our scale, and that to me looks more like a legitimate 45-degree line. All right, and if we take a look at what's happened, the market has just stuck its nose back underneath, so that once again signifies a little bit of weakness. If you go to a 10-cent increment, you'll see that it's just too much. Now what we've got, the 1 by 1's overshooting the market, and it's saying that this market's particularly weak. So we know that running 10 cents a day is probably too much. Running 5 cents a day, to me, makes that look more like a 45-degree line. So I can pick that up on calendars, I can pick it up on traders. And one of the other ways I know whether I'm using the right scale is to actually flick it back. And if I run it back, you see how that low and that top square out. So for me, that's a legitimate, we square out with that top. So 5 cents a day, I think, is not one that we would be, there's a low. It's not one that we would be in trouble for using. All right. Now, I'm only going to use these in situations where I'm really close to the current anchor. So in this case, we're, about a year away from the current anchor. So we might have to adjust our point sizes. But if I was running off the all-time low, which is, we know back here, I'll pick on again because I had another example I wanted to show you. I'd definitely be running at 1 cent per day. I wouldn't be running out at 5 cents per day. If I run backwards off that low, $1.13. So I didn't show you this before, but when you run back from that low, a calendar chart, it actually squares out the what was the all-time high at that stage. So for me, that tells me that that all-time high, if you'd actually run what was the all-time high back in 1987, if you'd run an angle off that on the way down, you could have actually gone very close to knowing where that low might have come in. So you might have been able to use that in at that time. But I like the fact that just by running it backwards, it gives me some harmonies with the market. So that's why you always want to run things forward and run things backwards. But as you can see now, we've got a couple of angles on the chart, and if I throw the one on the top on the way down, I've got enough information here to keep any kid happy as far as preschool children and colours, And here's where and now I can make that a trading day chart, and I can watch for all the lines to intersect. The $1 million question I get from people all the time is where the lines intersect, does that mean anything? And I guess I'll jump out of here and I'll come back to camera. So where the lines intersect. So if I'm running lines from a top to a bottom and a bottom to a top and all of those sorts of things, and I've got all these lines on a chart, where they intersect, does that mean anything? And I'd have to say, if you had 10 other overwhelming reasons why that was important, that area that you were looking, then I would allow it to come into my analysis. If it's the only thing you've got going for you where the two lines intersect off the top or a bottom, leave it alone. I don't know where Gann talks about the lines intersecting being important. David doesn't talk about it. I can find you 100 examples of where the lines cross the market, makes a dramatic turn, and I can find you 100 examples of where the lines cross and nothing happens. So in absence of other guidance, if you have lots of things working for you and that's just one other piece in the puzzle, I'm happy for you to include it. But if it's just the only thing you've got going for you, then I would leave that alone and not read too much into it. So 2 seconds as I need to close my window as the rain starts to come in. So the southerlies hit Sydney. All right, so Darren said running back from the all-time low gave the previous all-time low. How would that have been affected by pricing change that occurred with splits and rights issues as it adjusted what was the all-time low, found that in the first week? Yeah, so, yep, no, I'm with you there. So what happens is when you get these adjustments, they can muck around with the prices. So I tend to just go with the flow in the sense of if the prices get adjusted, I just run with the numbers, and if it happens to muck up my what was squaring out tops or bottoms, but because the price action should all be adjusted within proportion, you shouldn't actually find that your angles intersect at different places. By all means, by all rights, it should actually line up the same way that it did before. But part of the reason that I like to trade commodities and those things is that they don't get adjusted. It can be a problem with stocks if they do have splits and adjustments and capital reconstructions. What you were using as major lows or major highs, all-time tops and bottoms can change, and therefore the numbers change, and that can be a bit problematic. But let me have a bit more of a think about that because I don't have the answer I've given you is not a clear one, and I'm not really thinking what would be a clear answer at this stage. So I'll have a think about that through the week, and we can pick that up next week. All right, so I think you're following the gist of what we did. So what I might do is I might leave the Aussie dollar for you guys to do. So what I'm saying there is that you need to run some angles off lows and highs, and make sure you run trading days and calendar days, and then do some zero date work. And I'll pick that up, and we'll talk about that research and what it's telling us for next week. Just looking at the time, though, I'm just thinking 2.5 hours. I'm sure not much more is going to go in. It's enough information for tonight. I think you get the gist of what we're trying to do, but I will definitely pick that up, and we'll do it with the Aussie dollar come next week, particularly if there's anything of interest that's useful to us there. All right, so I guess just to do a recap on what we've talked about tonight. Just as a reminder, I'll send you out a survey that'll come out via email just to work out how we're going to pick up sessions, whether you want to do some catch-up work, so whether you want to do a couple of sessions a week, or whether you want to do weekends or nights or whatever, or whether you're just happy to do one session a week. And look, I'll do my best to go with what the broadest spectrum of the class is. I'm not going to disadvantage people. So if it just means we've got to plot out week by week, we'll happily do that. But if everyone's of agreement that they're happy to do, even if it's 1 or 2 weeks of doing a couple of double sessions, it just means we'll get that momentum. So expect that to come out. Obviously, we spoke at length about what the current markets are doing, and Des made a great point about patience. I've ordered some patience that should be arriving tomorrow. I just can't wait for it. what I'll point out is that the markets are teaching us a level of patience at the moment. Look for your quality of setups, forget the quantity at the moment, capital preservation. Don't just chip away at your capital going backwards because you're frustrated you can't get into the market. And then obviously what we did is we took a good look at Newcrest Mining, which we think is due a bit of a pullback. We'll be watching the US dollar and gold as a guide there. Aussie dollar caught in a bit of a sideways range, and we'll just see what develops over the weeks ahead. But you know, I think oil could certainly have something to keep us busy. We talked a little bit about that sort of stuff. And I guess it's just getting back into a routine. And the plan of attack is to, you know, next week we might talk about squaring highs or lows for pressure dates, but we also need to look at boxes and squares and all of those sorts of things as well. So, yeah, thanks for that, Debbie. As I said, I'd rather than sort of doing a Chinese parliament as sort of, you know, getting around to put up their hands. Debbie's just given me a suggestion about when we could break and all of that sort of stuff. And certainly we'll take a break around Christmas, guys. I'm not running sessions on Christmas Day or Boxing Day. I know your family will probably need you around those times, like mine will. But all I'll say is we'll work out a roadmap together. Okay, it's not just me going to tell you what's going to happen. We'll work out a roadmap as a group as to how we're going to, you know, take our sessions from here. And as I said, if it's just a case of doing it week by week, having a break through Christmas and into next year, then we'll do it that way. Otherwise, we'll plan some catch-up sessions. So rest assured, Debbie, we'll get that taken care of. Thanks, Des. As always, I appreciate your efforts and you know, your participation. Thanks, Lynn. Thanks, Jose. Thanks, Graham. Thanks, Annie. I appreciate that. Thanks, Key. You know, I'm glad everything's got back to, you know, the normal chaos is a whole lot better than the abnormal chaos. So thanks, Gerald and Darren. So look, appreciate everybody's patience. You know, I know it was probably it was a break right at the time where we were getting some good momentum, but what can we do? That's just how life goes, and we'll take it from there. So we'll pick it up from there, guys, and hopefully tonight's got you back on track. There's some work ahead of us, and we'll bring it all together, come closer as the sessions come together. So thanks, Wayne. Thanks, Linda and Graham and Robert and Stephen. Thanks for everybody. So let's get back into the forums as well. So let's get them moving as well and get some questions going, and we'll get some good discussions going, and I'll promise to do you know, a whole lot more work in that area as well, guys. So all the best. Thanks for your patience and getting back on the horse with us tonight. No problem, Lois. You finished your assignment. Well, you know, that'll keep you know, we'll get you, you know, get you your pass in your assignment, and this will give you plenty more time to tackle. So good stuff, everybody. If there's any final questions, now's a great time to shoot. Otherwise, I'll give you all I can't say an early market. It's a late mark, so it's obviously been a long one tonight. So thanks for hanging in there, guys. And yeah, I hope you all have a great week, and we'll definitely be together come Tuesday night next week. All right, everybody. Well, have a great week, and yeah, we'll talk soon. So